Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Turning positive, 10-year Treasury yields, real yields, top zero for the first time in over 2 years. The yen snaps a record losing streak as traders brace for possible intervention to support the currency. Cancel culture. Netflix plunges 25% after hours as it loses customers for the first time in a decade and signals more pain ahead. Plus, profit warning, Credit Suisse sees a first quarter loss stemming from the war in Ukraine and fresh litigation expenses.
The problem today, Tom, is I just want to know what you watch on TV because of the Netflix story. So this is one of the only things that we're going to try to get at the bottom of that. And of course, futures, the fact that we're seeing a repricing in real yields and what that means for stocks. So if you look at the DAX futures, gaining 0.2%, also a bit of a lift to FTSE 100.
Yeah, there was the economic data out stateside as well that gave a bit of lift to markets yesterday. In fact, the Wall Street session ended solidly in the green. And then, of course, we continue to watch the comments from Fed officials. Charles Evans coming out saying maybe a level above the neutral rate, which is around 2.4%, will be adequate. So we continue to monitor that, of course, as we adjust to this inflationary picture. The Spanish IBEX opening up 0.2%. The FTSE 100 is range bound, of course, on the geopolitics, this new front in the war in Ukraine and the Donbass. And when it comes to France, the domestic politics, that debate between Marine Le Pen and Emmanuel Macron, the president, of course, later this evening in France as we lead up to that final vote in the presidential elections, April the 24th, this coming Sunday. The Spanish IBEX gaining 0.2%. The CAC 40, talking of France, up 0.3%. Let's switch it over and see how things are playing out cross asset. Then we're talking about the yen story and the fact that maybe there's going to be some intervention to support the currency. And you've seen a bit of strength come through for the yen, but also you've seen a sell-off in the Bloomberg dollar index. That's lower by 0.2%. Future stateside looking to losses of 0.4%. Again, after a solid session yesterday, it's the yield story that's back front and center for us. The US 10-year at 2.92, and of course talking about the real yield, at least around the 10-year, edging into positive territory again. As Francine was saying, what is that going to mean for risk assets more broadly? Brent is at 108, up 1.2%. Currently in the session. Francine.
I know, but what are you watching on TV, Tom? We'll get to that in a second. We, of course, are looking at a lot of the media stocks in Europe after we saw Netflix really disappoint and take a lot of the other streaming services in the U.S. down with it. In terms of what we're seeing right now, we're seeing staples on the upside. I'm seeing construction, chemicals, banks on the upside. There's only about 4 industries that are actually seeing a bit of pressure: technology, utility, energy, healthcare, and basic resources. But again, if you look at the range between the ones that are losing and the ones that are gaining, it's not a huge amount. The lowest one is about 0.7% lower, and the highest is 0.6% higher. So, Tom, everything could move quite quickly.
Individual stock stories to bring to your attention. Credit Suisse, we mentioned this in the headline, setting itself up and just reminding investors it's expecting a loss. This was the line in its first quarter earnings. You get those earnings out next week. Provisions around its exposure to what's happened in Ukraine, Russia, but also additional legal costs, provisions putting aside. Currently down now, Credit Suisse at 2%. Not catching a break, this company, as it tries, this bank, of course, as it tries to navigate past the scandals of Archegos and Greensill. Danone, a very different picture for this company. Best sales it's seen for about 7 years, bolstered by its bottled water division, currently up 4.5%. Just Eat looking potentially to sell off, or at least partly sell off, its US unit of Grubhub. coming in with estimates, or at least earnings that missed estimates. Overall sales for this company down 1%. That was below the estimates. Another disappointment for Just Eat post-pandemic, 3.5% lower currently for this online delivery company, Francine.
Yeah, and yet I buy a lot of delivery, groceries more than takeaway, but I buy a lot, so I should be helping some of those stocks. Let's also get over to our Bloomberg M Live managing editor, Mark Cudmore. Mark, you're looking at U.S. financial conditions, so perfect chart for today.
Yeah, absolutely, Francine. It's kind of like another variation of the idea of positive real yields, just about getting into positive territory on the 10-year tenor. But that's because of an incredible surge recently, and we're getting excited about the fact they're just getting positive. Well, this is another way of kind of looking at this angle. This is U.S. financial conditions. It's using the Bloomberg Financial Conditions Plus Index, and the difference between the Plus Index and the normal one is that it includes some kind of bubble measures like the housing index, like tech stocks, like meme stocks, and basically implies about household wealth. And I guess one of the themes is that we have seen, when this falls, this means a tightening of financial conditions. We have seen an extremely sharp tightening of financial conditions over the past 6 months, but yet financial conditions are still so much looser than any time in history up until about 18 months ago. This is going back over the last 25 years, the last 30 years, you can even look, and we have the whole the dot-com bubble way above then, the tech bubble in 99. Look, we've completely surpassed that in how loose it is. We have the housing bubble, and yet this is just an extraordinarily loose situation. And that's why, even though we're seeing yields going higher, even though we're seeing a tightening of financial conditions, until financial conditions actually get loose, I think stocks will continue to be volatile, but not necessarily go into a proper bear market. That might happen later on this year when the Fed does properly tighten financial conditions.
Okay, that sets us up very nicely for the next conversation. Bloomberg M Live managing editor Mark Cudmore out of Singapore on those conditions, real yield conditions, at least on the 10-year space, and more broadly what it means for assets. We'll get into that conversation. Thank you, Mark. Now with our markets editor, Christine Aquino, and Norman Villeman, Chief Investment Officer, Wealth Management at Union Bancaire Privée. Christine, let's start with you then. The question of the day then for our M Live team, Christine, is which assets are most likely to be impacted by this move into positive territory, at least around the edges for real yields when it comes to the 10-year? What is your assessment? How are things shaping up?
Well, Tom, I think the immediate consensus among investors is that tech stocks are definitely in danger with this move. Again, they're kind of at that epicenter of the bond sell-off this year, and also just the idea of the Federal Reserve and other central banks moving to tighter policy conditions. That definitely is not great for growth stocks in general, but particularly for these highly valued tech stocks. Other things that are kind of in the pipeline as well, as far as the assets that are in danger potentially, would be some of those credit names that have been kind of benefiting as a potential kind of alternative to government bonds that are selling off. But now that we're seeing treasuries yielding enough to compensate investors for inflation, you definitely see a little bit of rotation away from those riskier fixed income names into more the traditional havens such as treasuries, because it is finally giving something to investors that they were not getting before this. So,
Norman, when you look at equities in Europe, they still have not priced in a possible oncoming recession. Why not?
Seeing in Europe is the heavyweight that we see in things like metals and mining stocks, energy stocks, means the earnings picture is actually quite strong in Europe, looking ahead here, given the high prices. When we look underneath that in terms of some of the consumer stories within Europe, we think that's a place where you'll see a bit more challenge going forward.
Norman, does 3%, we get to 3%, we're currently on what, 2.98 for the US 10-year, or should I say 2.92, 2.98 is the 30-year, 2.92 for the 10-year. Is 3% the level at which you start to see pain, at least at the more exposed, frothy part of these equity markets, the valuations, where valuations are looking stretched? Is that a pain point for you?
We do think that kind of 3.5% on 10-year is going to be a pain point here, perhaps not so clearly in the equity market. Property markets in the U.S., which are very bubbly, as Mark has been pointing out. Historically, when you've gotten affordability where it is right now in the U.S., at this level, you start to see prices flattening out, even declining looking forward 2 years. And we think that's something that is down the road for investors in the next few months.
Christine, going back to that real yield idea, I mean, the fact that they're rising also, of course, means that we could see changes in stocks. But how much, there was such divergence between bonds and stocks. I mean, this was just a matter of time, of like when, not if.
Absolutely, Francine. I think it really is this kind of interchange between the two asset classes. And this was definitely one of the signals that I personally was looking for as a potential sign of the bond sell-off, at least pausing for now, because finally bonds are attractive enough to investors who are looking for ways to shield against inflation. And so it's probably, not a bad time to take a look at that sort of idea as well. And of course, other divergence plays coming into play as well between treasuries and other parts of the bond market, particularly some of those emerging markets that previously looked a lot more attractive because of that real yield differential. Well, probably less so now that we are here in U.S. 10-year real yields.
Norman, let's bring you in on that point and the attractiveness of bonds when you're getting yields of close to 3%, and when the foreign buyer, particularly Japanese, start to wade in. Are we starting to see that now? Are we starting to see a top out, do you think, in these yields?
Perhaps not quite yet, but I think we're pretty close. We're not seeing foreign buyers come into the treasury market, mainly because the hedging costs in Europe and in Japan are actually quite high from here. But I do think what you're going to see is the impact on growth will eventually cap where 10-year yields go from here. I think the point that Christine made is exactly right. What we're seeing in terms of spreads in the credit markets are very, very tight right now. And so that pickup you're getting and that pickup you're getting to take on that extra credit risk, we think doesn't really compensate you. And that's making it more interesting in the treasury market relative to credit.
Christine, I'm going to play devil's advocate. So there's a feeling out there in the markets that if inflation rises, so you cut your spending, and which is why we're seeing Uber Eats and of course the other one, Netflix go down. Or if you're a devil's advocate, you say, well, I don't watch Netflix, I watch Amazon or Apple TV.
Absolutely, Francie. I mean, there are really two very interesting schools of thought here in terms of takeaways from the Netflix debacle. Is it really or consumers kind of getting away from discretionary spending and trying to figure out their spending and prioritizing their needs over their wants? Or is it just people going out into the real world and stopping watching their Netflix and actually meeting people in real life? I mean, it could potentially be the latter, seeing as we are seeing restrictions kind of falling away and that activity generally picking up still. And other indications, for instance, credit card spending not necessarily showing a decline in consumer spending. So perhaps this is just a reallocation of what consumers are spending on. They've stopped hanging out in their houses and going out into the real world.
I'm pleased to inform you that Tom McKenzie is still a big fan of Love Island. That has not changed, despite us going back to work. Christine, thank you so much. Christina Kino, our markets editor, and staying with us, Norman Villeman, Chief Investment Officer for Wealth Management at Union Bancaire Privé.
All right, hard to come back on that one. Coming up, Love Island. It's fantastic. Who's not into Love Island? Credit Suisse warns that it expects to post a first quarter loss next week due to litigation and its exposure to Russia. More on the travails of that Swiss bank next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. 13 minutes into the European trading day, and you can see actually a lot of these equities are being supported. Europe Stoxx 600 gaining some 0.3%. We're seeing similar gains for the DAX, the CAC, and the FTSE 100. Now, investors again evaluating the resilience of the global economy and looking at, of course, the COVID lockdowns in China and hawkish messages from the Fed. Now, Credit Suisse says it expects to post next week a first quarter loss due to a hit to revenues from Russia's invasion of Ukraine and an increase in legal provisions. For more, we're joined by Bloomberg's Marion Halftoff-Meyer, who's been following Credit Suisse almost from the very beginning. Marion, I was surprised of the fact that they actually put this news out about a week earlier. Does it mean it's really bad? What does it mean for the recovery after its worst year since the financial crisis?
Francine, Credit Suisse has now had profit warnings for one reason or another in 5 of the last 6 quarters. So, yes, it's bad. It's bad for recovery, and it's bad for moving on from the last 2 years of scandals and provisioning. Last year's catastrophe resulted in more than half the management team being replaced. There's been significant changes on the board of directors, but at least they're being a bit forward with, we're going to tell you ahead of time. We're not going to let you be caught by surprise. They're sort of required to do this, right? But we'll have to see how this impacts next week. The analysts right now are having trouble assessing just how big the loss will be, and they haven't guided exactly on how big the loss will be.
Yeah, the stock now down 2.5%. What are you looking for next week then from those earnings?
Yeah, so most interesting and most importantly will be to see how the wealth management business has been affected. That's both in terms of the reputational hits, but also with respect to Russia's invasion of Ukraine. We saw many individuals get sanctioned. These are high net worth individuals. This is the crux of the wealth management business, and Credit Suisse does have exposure to Russian individuals. So we'll have to see just how much that business impact plays into the results and going forward as well. We did see, both Citi and JP Morgan, who reported earnings last week, build significant reserves related to business that might be impacted by Russia and Ukraine.
Marion, thank you so much. Our star banking reporter, Marion Halftoff-Meyer, there joining from Zurich. Now back with us, Norman Willemin, Chief Investment Officer, Wealth Management at Union Bancaire Privée. Norman, when you look at, of course, what inflation does to some of the banking stocks and what interesting, increase in rates, this should be a sweet spot. A lot of the banks aren't enjoying this. How much of volatility would we see in the sector?
It should be a sweet spot, but as it was pointed out, the big challenge for a lot of the banks right now will be on the credit side as we go forward and we see this slowing economy. And so I think this rising rate dynamic that was put forward as a positive for the banking sector will probably give way to the credit issues that should come over the course of the next year. And that's going to be a headwind, I think, for the sector.
Norman, what is the case for cyclically oriented stocks? I know that's your preference at this point, given what we're seeing in terms of the growth downgrades that we're getting from the likes of the IMF and the World Bank. How do you justify further exposure, increased exposure to cyclical stocks?
Yeah, look, we think we're late cycle in the global economic recovery, certainly in Europe and the United States from here. And what we're really looking for are visibility on earnings. And we think the sectors that can deliver that over the course of the next few quarters are going to be these cyclical sectors, because we have price visibility, for example, in some of these commodity sectors and some of these industrial sectors because of the strength of their order books. And this avoids the uncertainty, for example, as we talked about in financials due to their balance sheet concerns looking ahead.
Norman, what do you do with tech at this point? So they're high priced, some of these tech stocks, if you look at valuations, and with real yields rising, it undermines some of those valuations.
Yeah, look, valuations are an issue, but as we know, tech has been hit really since the start of the year. So those valuations have come down. We think high quality tech with high quality earnings. So the big cap tech names do present an opportunity from here. But investors will have to deal with multiple derating. So what you need to focus on are companies that can generate earnings growth that offset much of that multiple derating that lies ahead.
How much duration do you want to be adding at this point, Norman?
We're not adding duration right now at this point. It is getting tempting as we get near 3% on treasury yields. I think instead what we're looking to do is manage credit risk. We think that's the next shoe to drop in the bond market right now. Spreads probably going out. And so what we're recommending for our clients is to focus on more alternative segments of the market. So long, short credit arbitrage, and not really taking directional positions within the bond market currently.
What kind of credit arbitrage?
Well, we think there's an opportunity for active credit pickers right now. So as we're seeing, quite a lot of banks are running into some challenges in terms of the credit markets. And so investors, where they benefited previously over the last decade or so from just falling yield and declining spreads, now you're going to see a lot more dispersion going forward from here. And so managers who can pick credits are going to be very valuable in the current environment.
Okay, Norman Willeman, CIO, Wealth Management and Union Bancaire Privé. Thank you very much for giving us some of your insights this morning. Francine.
Now, coming up, subscription canceled. Netflix plunges 25% after hours as it loses customers for the first time in a decade and signals more pain ahead. Interesting, because it's losing customers for the first time in a decade, it's now throwing out all the rule books and it's thinking about advertising. Those details next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the Open. We are 20 minutes into your European trading day. You're seeing gains of around 0.4% across the benchmark European Stock 600 after a solid day on Wall Street. In terms of your sectors, banks, technology and autos leading the gains this morning. At the bottom of the list, basic resources and energy. Yields just coming off a little bit on the US 10-year. The dollar is also softer by about 0.2 of a percent.
Now, streaming giant Netflix is losing customers for the first time, I don't know if you're one of them, first time in 10 years, sending its shares tumbling post-market, despite hits such as Bridgerton and Squid Game. Co-Chief Executive Officer Reed Hastings says he's planning to create a lower-priced version of Netflix services that could include advertising.
I'm a bigger fan of consumer choice, and allowing consumers who would like to have a lower price and are advertising tolerant get what they want makes a lot of sense. So that's something we're looking at now. We're trying to figure out over the next year or two.
Well, Bloomberg's Laura Wright has been across the results. So, Laura, I mean, theoretically, it's the concern is that basically they've guided and saying, like, guys, don't worry about it. All the blips we've seen is because of the pandemic. And so it's really a bit of a shock that they're expecting also to lose more customers going forward.
Exactly, Francine. The key question, have we reached peak Netflix and chill? The company facing a trio of headwinds from economic reopening, the increased cost of living, inflation now at the forefront of consumers' minds, and competition, other players such as Disney Plus and Amazon Prime. But Netflix is also facing increasing costs of production studios and labor. So along with Amazon Prime, Netflix, they've increased prices this year. Disney Plus haven't done that. They're a younger platform trying to increase their market share. And there's also the conundrum, Francine, of 100 million households who piggyback off existing account holders. I confess I have been on my brother's Netflix account for 10 years.
That was remarkable to me. Reed Hastings was relaxed about this. I didn't realise. I mean, I know members of my own family do, but I didn't realise it was kind of advocated by Reed Hastings, the founder. That doesn't make any sense.
I mean, I just want to know, why am I paying for it and not getting someone else's subscription in the family?
Yeah, you were the mug. You were being generous, handing it out. What's the longer-term outlook then for Netflix amid the competition, the change in the business model?
Yeah, well, ideally they want to gain more subscribers, and one way to do that is to create rather a platform where there are no adverts. Look, in the first quarter, they lost 200,000 subscribers, and for this quarter, they're projected to lose over 2 million. So it's truly lost its status as one of the pandemic darlings. But as we know, macro headwinds come and go. They were caught up in the tech rout at the end of last year. But one thing that is certain is that the direction toward direct-to-consumer content is here to stay.
Okay, Laura Wright, thank you very much for breaking down those Netflix results. Top of the list for you when it comes to your Netflix viewing?
Not Netflix. I have Netflix, but the problem is content is king. And so I've now switched. I'm looking at Slow Horses, which I have to say is very, very good.
Which is where?
Not on Netflix.
Not on Netflix. There you go. Francine is part of the issue for this company. You've got to address Francine's needs. You're not going to do that. You're not going to succeed. All right, that is the message. Thank you. In terms of the future stateside, you're looking at losses on the S&P E-minis of 0.3%. Again, with the context, you had a very solid day in the US yesterday. Some decent economic data. Nasdaq futures pointing to losses of 0.7%. Here in Europe, you're looking at gains of 0.4% across the benchmark.
Yeah, it was interesting also to hear from the Chicago Fed President Charles Evans saying that interest rates will probably exceed actually the neutral level in the campaign to dampen price pressure. So we're looking at real yields in that context as well.
Absolutely. 2.4% is approximately where you're looking at neutral. Charles Evans saying that it could be above that. That after, of course, Bullard came out with that 75 basis point. Putting that on the table, at least, Francine.
Putting that on the table. Also on the table, we're in Helsinki as the country debates ditching neutrality and joining the NATO alliance. What does that mean for Vladimir Putin's war in Ukraine? What does it mean for Russia? We'll discuss that next. And this is Bloomberg.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 30 minutes into European trading day, and here are your top stories. Turning positive, 10-year Treasury yields top zero for the first time in 2 years, while the yen snaps a record-losing streak as traders brace for possible intervention to support the currency. Cancel culture, Netflix plunges 25% after hours as it loses customers for the first time in a decade and signals more pain ahead. Plus, profit warning, Credit Suisse sees a first-quarter loss stemming from the war in Ukraine and fresh litigation expenses. Tom, we're looking at the markets, and of course, real yields rising could be a game changer for stocks.
Yeah, particularly the technology sector. And we're looking at Netflix anyway because of those idiosyncratic reasons around subscribers being reduced in the first quarter. That hit maybe 2 million in terms of the loss of subscribers. And of course, the read across then more broad across the tech sector was yields continue to rise. And as Francine was saying, real yields within the 10-year space at least edging into positive territory. So let's have a look at how things are shaping up then 30 minutes into the session here. The benchmark is gaining 0.4%. We continue, of course, to watch what is happening in Ukraine and Russia, that second stage of the war in eastern Ukraine and the Donbass, and of course macro and the central banking picture with Charles Evans coming out and saying that the neutral rate and above the neutral rate is possible, and certainly continuing to underscore the idea that 50 basis points is very much in play for the next Fed meeting in May. The DAX is up 0.5%, the FTSE 100 just range bound as well, as we digest some of these earnings along with the macro picture. Let's switch it on, see how things are playing out across the sectors then. We are waiting later today. The IEA will come out with its latest oil report. Oil remains in focus, of course, the energy component of the geopolitics. Technology currently gaining 1.3%. Yields are just a little off in the last half an hour or so. Banks also up 1.3%, despite what we're seeing with Credit Suisse and its warning about a loss in the first quarter. And in terms of what we're seeing in the red, you've got basic resources, energy and telecoms. Basic resources down 0.8%. Francine.
Now, Tom, later today, Finland's parliament is due to begin debating whether the country should drop its policy of neutrality and join the NATO alliance. Both Finland and neighboring Sweden said they're stepping up consideration of the issue in the wake of Russia's invasion of Ukraine. Now, for more, we're joined by Europe correspondent Maria Tadeo, who's in Helsinki, joined by guests. And Maria, this would really be a game changer if they decided to join.
Yeah, it would be a game changer, Francine, and what a day to be here in Helsinki. This very unique debate that would essentially undo decades of foreign policy and now make this very clear stance to join NATO in the context, of course, of the war in Ukraine. And to talk about this, I'm happy to say we're joined by Elina Valtonen. And thank you so much for being here. Your party, the National Coalition, and you yourself, you've made it very clear you are in favor of joining NATO. But of course, the obvious question is, why now?
Well, I think the war in Ukraine has showed everybody that we need the deterrence that NATO brings us. And also Finland and Sweden, of course, would be a very good addition to the alliance.
And of course, you mentioned Sweden, Finland. The idea is that both of you will make this formal application by the end of June. So we're talking about weeks, not months. What do you expect is going to come out of this debate today?
Probably we will have a lively but a very calm debate in a Finnish way, I would say. So people who still haven't made up their minds, some of the MPs will have the chance to discuss the matter, and also obviously we will have the chance also in the committee work.
And, you know, to me what is striking is this is at the political level, but when you look at opinion polls and the conversation on the streets here, public opinion has just completely shifted from no, we don't want to do it, maybe it's a risk, to yeah, we should join. What's pushing this?
Well, I would definitely say that the Finnish people have taken the lead on this. Of course, it's not a huge step in the sense that we have been partnering very closely with NATO over the previous years, and we have strong cooperation with many NATO countries.
You see also the term neutral, here you see it differently. It doesn't mean that you're neutral.
Yeah, we don't think we are neutral. We are part of the European Union, and of course we have all these also defense partnerships with different countries. So it's just a natural step to take, I think.
And I wonder, of course, you have this huge land border with Russia. The Russians have already said, NATO expansion, we see it as a threat. Beware of some of the consequences of this. Is that a threat? Is it bluff? Do you worry about some of the language, in particular when it comes to Finland with that huge border?
Well, Finland is a sovereign country, and it's a decision that we will make ourselves, also together with NATO, obviously, if we are to apply. But Finland has taken security very seriously forever, basically, and we have very strong defense forces, and I think we will be a good addition to the alliance and also to the overall security architecture in this region.
So you're not moved by any potential threats? I mean, this is something that you say as a sovereign country, whatever Russia says, they can say what they want, but our decision will be debated here and we're going to follow through on this.
Well, to be honest, I don't think Russia will be hugely surprised if we apply for NATO.
As a result of the war, I guess. Essentially, they've pushed you into this in some ways.
Yes, kind of, but also because we are kind of already in their minds a NATO country, since we cooperate very, very closely together with Sweden, of course, with NATO and different NATO countries, and we are in the European Union. So I don't think it's a huge surprise to them, and of course they will need to say something, but let's see what happens.
And you know, this white paper that came out last week, which kind of presents the basis for this, to me what was also telling is that it now openly says, frankly, Russia is our biggest foreign policy issue. It could be our biggest threat. That's also a change in tone, because before it was clear that it was, but Finland wouldn't name it, and now you're ready to name it. What is prompting that?
Well, the way Russia has acted in this horrible war, I guess it's been an eye-opener to everybody, and it's a matter of fact, and it's clear that it's good that it's stated there clearly. And also what is stated in the white paper is that Finnish NATO membership would be a stability-providing fact to this area, to the Baltic Sea
The best
region.
guarantee of that. And of course you have your pin in referring to Ukraine. And of course we think of the people of Ukraine in this horrible ordeal. But I wonder, when you see the situation on the ground, as a member that potentially joins NATO, how does it make you feel? Because what we have seen is that at times, if you don't belong to an alliance, you are left to your own devices. That is the problem for Ukraine right now. Every week, they don't know if the weapons are going to come or not. Is there also in terms of practical needs that you may be needing in the future?
Well, of course, you never know what happens in the future, but I wouldn't directly compare Finland to Ukraine. I think we need to assist Ukraine in every possible way.
Including energy?
I think so.
Embargo?
I think so. I think that's what the European Union should do next.
And will it come on oil? Do you see that happening?
Well, let's see what happens. It's very much up to Germany, let's put it that way. But in any other way, we can assist now, providing weapons and, of course, humanitarian aid, financial aid, all types of aid. But what Finland does, it's a totally different matter. I think we will be making a decision which will define our future for decades to come. So it's really not so much to do with the situation in Ukraine right now.
Well, Anna Valtonen, thank you so much for joining us
Thank you
on
so much.
Bloomberg, especially on this day, a very important conversation to be had. And in many ways, the changing phase of European defense happening almost in real time as a result of this invasion of Ukraine. Now, of course, entering this crucial phase in the east of Ukraine and that battle for Donbass. Francine?
Maria, I'll pick up from here. A fascinating interview on that historic shift from Finland increasingly towards, of course, the NATO alliance. Maria today there with the Finnish government MP, Elina Valtonen. Thank you for bringing us that interview. And don't miss today's big take. It's on and along the same lines, story on the terminal and Bloomberg.com. It looks, in fact, at how Kremlin insiders are quietly questioning the costs of Putin's war in Ukraine.
It's a really good article. We also pushed that on social media, although the question is, does it mean that there could be a regime change? We probably think at this point not. Coming up, the sports marketing platform Open Sponsorship gets the backing of tennis superstar Serena Williams. So we speak to the chief executive, Ishveen Jolly. That's coming up next, and this is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back to the Open, everyone. 41 minutes into the European trading day, and you can see stocks are being supported. Of course, if you look at these stocks, Europe 600, they're getting some 0.4%. If you look at U.S. indices, though, those futures are falling. Again, investors weighing the impact of rising real yields on the appeal of riskier assets. Then they have Netflix to contend with, COVID lockdown still in China, and a hawkish Fed. So there's a lot to deal with. Europe stocks, for the moment, supported, Tom.
Yeah, we're going to pivot to sports now, and she's been dominating the tennis court for more than 2 decades, and now Serena Williams is taking on the business world. She's throwing her support behind a sports venture called Open Sponsorship. It is a marketing platform that connects brands with top athletes, and it's just landed a Grand Slam investment of more than $1 million from the tennis superstars VC fund. Joining us now is Open Sponsorship CEO Ishveen Jolly. Ishveen, thank you for joining us in the studio. Talk to us about what you do and what this funding from Serena Williams will allow your business to do in terms of growth and building out the project.
Yeah, absolutely. Thanks so much for having me, guys. So it's Open Sponsorship. We are the largest marketplace connecting brands to professional athletes. Also do a bit of work in the teams and event space, but mostly athletes. And as a former sports agent, about 7 years ago, I realized that there was this gap in the market where it was really tough to find the right athlete, do the deal, make sure it kind of drove ROI for you. And I thought, well, why is there not a platform, a marketplace that does this all for you and makes it all secure and easy? So that's what we started. And then obviously, as you mentioned, we recently closed our growth round. Serena Williams was a big part of that. And for us, the main use of funds is growth. So sales, marketing, expansion, obviously expanding into the UK, thinking about new verticals, and things like that.
Ishveen, it's such a brilliant idea, and we were kind of joking around, you know, if we had a company or if we were a brand, who you would choose as the face in sports. I mean, it's not easy because it has to, of course, match with your values.
Yeah.
And there's been so many scandals. How do you kind of like protect, you know, a brand in being associated with someone then who goes south?
Yeah, absolutely. I think, firstly, those cases are usually the anomalies. So we don't hear about all the amazing ones that do happen, but of course it happens. You know what's interesting? The trends of the way that sports and sponsorship are going, very similar to influencer marketing, where it's usually like shorter term. Of course, with the top 1%, we were talking about Emma Raducanu, of course, all of her endorsements are going to be multi-year and people are riding that wave. But a lot of the stuff that we do and that non-top 1%, it's usually short campaigns, you know, Commonwealth Games is coming, let me work with a couple of athletes during the games and let me move on. And today, you probably don't even remember who everyone's brand ambassador is. No. I think long gone are the days, you know, so I think we're seeing less risk because actually I'm going to work with you during this time and then it's on social and it's forgotten. And then I'm going to pick up the next star, which is, you know, some people will argue that's not the best way, but in my mind, I think it really works and it avoids these scandals and these legacy things that happen.
So I totally understand why you've got 11,000 athletes on the platform, and many of those are not in the top tier. Many of those will not be instantly recognizable names. Why does it make sense for a LeBron James, who's also on your list, or a Wayne Rooney, to be on the marketplace? It's easy for me as a brand, isn't it, to reach out to one of those A-list stars and say, let's do a deal?
Yeah, it's a great question, and I would say the main reason why is, one, there's no risk. So 50% of our athletes are signed up by agents, so a lot of the big guys are. Now, as an agent, it is quite hard for me to get deals done. As you said, like, it's easy to find people, fine, if it's like a Nike or a Coca-Cola, but there's also tons of international brands. When you think about Wayne Rooney's repertoire of brands, or Ronaldo's, you've got Dubai, UAE, Hong Kong, kind of, you name it. And so I think international, it makes sense. And then we're seeing a rise of like new categories. I'm sure even on Bloomberg, you're talking about industry verticals you never thought you'd be talking about as unicorn companies. And so what happens is when these companies are born, fintech or insurtech or any kind of tech, they don't have all the relationships and they think of like a different way, performance marketing, and they've come from a different background. And so I suppose we are the conduit to a lot of these technology companies that have huge budgets but don't necessarily go to these sports conferences that are like the old school way of getting deals done.
I feel like we should have a brand ambassador for European market. I don't know who we'd choose. Lucky Ishveen is here. Ishveen, who is it most difficult to convince? So this is obviously a transaction between, you know, a brand and a sports personality. I've always been fascinated when you look at some of the brand ambassadors, like how do they choose, you know, that luxury watch company and not a drinks company, or kind of, you know, talk us through the thinking in that process.
Yeah, absolutely. So I'd say ultimately the first thing comes down to check size. So, you know, regardless of the fit or not fit, like, can they afford to pay the premium that's required? A lot of these athletes, like if you think about golf, they have very few days off. So how they choose to spend those off days is paramount. And so one comes down to, am I being compensated? And then second, it does come down to authenticity, especially because a lot of what's being asked of these athletes today is to post something on their social feeds. And so that is so visible to their fan base. And there can be a big backlash if fans think, well, you know, you're vegan, why are you posting this? Or you always talk about healthy eating and now you're promoting this product. So I'd say authenticity is a big part. For us, I'd say convincing brands is a big part of it, because there's so many ways that you can spend your marketing dollars. To tell someone, okay, you should spend it on sports and athletes, it definitely is a bit of a pitch.
Ishveen, just very quickly before we let you go, IPO in the plans now you've raised this cash?
Yeah, well, fingers crossed.
What's the time frame?
We'll see. There's still a lot more to do yet, so
okay.
Hopefully.
Who's our brand ambassador, though?
We still need to pick one. I would go for Emma Raducanu.
We don't have the budget. We'll speak to you for...
I'll convince you. Thank you.
All right. Ishveen Joly, CEO of Open Sponsorship, on that backing from Serena Williams. Thank you very much indeed.
Thank you, Ashvi. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Russia has launched what Foreign Minister Sergei Lavrov hailed as a second phase of the war in Ukraine, and early indications are it could go better for Russia than the first. After a ferocious night of artillery bombardment along a 300-mile front line in the east, Russian forces took a pocket of territory, including a new city, on Tuesday. That's according to the Ukrainian regional governor. As a result, they threatened to encircle an area at the top of the eastern front that holds as much as 40% of Ukrainian troops in the region. Prime Minister Boris Johnson has apologised to UK Parliament for breaking lockdown rules that he devised while insisting he didn't think at the time he'd done anything wrong. Johnson has already paid a fine for attending the Downing Street event on his birthday and may face further fines once police complete their investigations into other gatherings during lockdown.
Let me also say, not by way of mitigation or excuse, but purely because it explains my previous words in this House, that it did not occur to me then or subsequently that a gathering in the Cabinet room just before a vital meeting on COVID strategy could amount to a breach of the rules. I repeat, that was my mistake, and I apologise for it unreservedly.
French President Emmanuel Macron and nationalist leader Marine Le Pen are gearing up for their only live TV debate on Wednesday evening, a high-stakes event just days before the final ballot of the presidential election this weekend. More than 16.5 million people tuned into their previous debate in 2017, a bruising 2.5-hour sparring match in which the two candidates traded insults and clashed over how to fix a sluggish economy and fight terrorism. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine, I know you're going to be all across the French election this weekend.
Yeah, I will. I'll be watching. Of course, that's at 8 p.m. London time, and I usually force the kids to watch it as well. I mean, last time, I remember like it was yesterday. It's 5 years ago, and actually it was really, a car crash for Marine Le Pen. Since she studied, she's, of course, come on her own in terms of what she wants to get Macron on, which is basically inflation, the fact that the cost of living is rising. So they have to do a lot more to protect citizens. So it may work.
Yeah, she's been doing her homework, and currently the polls just crossing, though, showing that Macron, the latest poll, 55 to 45. You've got to question, of course, always, how realistic these polls are, given the history of polling and the margin of error. And, of course, Francine will be doing some special coverage on this throughout the weekend, of course, across that final presidential vote. OK, coming up, turning positive, 10-year Treasury yields, real yields, topping zero for the first time in over 2 years. We look at the broader implications for markets next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. The European Open, for those that forget, it's Europe. So policymakers debate uncertainties about the economy. The bond market takes another key step on the road to pre-pandemic normality. Now, the real yield on 10-year treasuries earlier climbing above zero for the first time in more than 2 years. Joining us now is Bloomberg's Marcus Ashworth. Marcus, first of all, thank you for joining us. It's been way too long that we haven't had your usually humorous opinion pieces on TV. When you look at what's happening, I mean, why are we so surprised that this is happening? If we have a hawkish Fed, this is a step.
Indeed, it is. And I cannot really see or hear anything, but I mean, as far as I'm concerned, you know, the US Fed is going to hike as much as it can, and until it stops, and therefore it will break the yield curve and it'll break the economy. But I mean, that unfortunately is what's going to have to happen. They're going to have to hike until they realize they've hiked too much, and that simply is what central banks have to do now.
Marcus, how do you fold what we're seeing with the Fed and the moves in rates versus the BOJ and its insistence that it's going to step in and cap the yields in Japan, that rate divergence that we continue to see?
Well, I mean, all I can say is that throughout my career, everyone's tried to take on the Bank of Japan and usually lost. I don't think the Bank of Japan is going to give in. I think they will continue to buy JGBs for as long as they see fit, and I think that will be quite a lot longer now than people will expect. They're not going to break. They may change, they may slightly alter things, but they are not going to alter their approach. And you have to understand that a little bit of inflation, which is all it is really in Japan, is a little bit of inflation, is exactly what they want and need for their economy. So I don't see the weakness in the yen really scaring the Japanese as much, say, as it might do for Europe. It's just this, they have a much stronger, much longer outlook on it.
Marcus, you wrote a brilliant piece with Mark Gilbert a couple of weeks ago saying who will buy bonds that the Fed no longer wants. How much dislocation on the market will we see because of that?
I just think the Fed have more control over the yield curve than perhaps people give them credit for. I think they will be able to play with it. But the reality is there are plenty of people, you know, the great retirement. What are these people going to do with their money? Well, they're probably going to buy bonds rather than stocks. I don't see too much, you know, get to 3% or something like that. It doesn't really matter where it is, but there will be domestic buying. But there needs to be domestic buying because it isn't going to be foreigners. Not going to be China, we certainly know it's not going to be Russia. So, I mean, there will be some dislocation, but the point is the Fed can play with the yield curve if it wants to. People also must understand that the overall duration is much shorter in US Treasuries.
Okay, Bloomberg opinion columnist Marcus Ashworth. Have to leave you there, running short of time. That is it for the European market open. Surveillance early edition is up next. Your markets here in Europe up 0.3%. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We have revised our projection for global growth downwards to 3.6% in both 2022 and 2023.
China, supply chains, new variants, what happens in Ukraine, those are giant elephants.
Probably we are going beyond neutral.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Chicago Fed President Charles Evans expects the Fed rates to go beyond neutral next year, while the Atlanta Fed President Raphael Bostic says the central bank should retain some caution. Cancel culture Netflix plunges 25% after hours as it loses customers for the first time in a decade and signals more pain ahead. And staying with Bloomberg Surveillance Early Edition, this hour we have a top lineup of guests, including economist Jim O'Neill and Hendrik du Toit. He's chief executive of asset manager 91. You can send in your questions for both of our guests using IB plus TV Go. But first thing is first, so let's check on the markets. And of course, this rising real yield means that we could see a bit of ups and downs when it comes to stocks. I think U.S. futures are seeing, of course, a downturn. The NASDAQ futures down some 0.8%. This is because of valuation. As real yields go up, valuations, for example, for stocks could come into question. European stocks, though, are still supported, gaining some 0.3%. Again, if you look at the U.S. 10-year real yield turning positive for the first time since March 2020, it could be, or it could signal a potential return to the pre-pandemic normal. What that means for a number of asset classes, the big question we'll try and answer. And you can see yen 128.69. We're having an interesting conversation with Marcus Ashworth, saying, what does it mean for the BOJ? Could they like to see a bit of inflation? Probably, after the stagflationary environment they saw over the last couple of decades. Now, if you zoom into what's happening individually in a lot of these countries, you can see the FTSE gaining 0.1%, but actually it's the DAX that's supported, I think, 0.3% higher, CAC 40, 0.5% higher. I'll be watching that debate ahead of the second round of the French presidential election. Stay with Bloomberg for full coverage. We're also live on Sunday nights, but tonight, 8 p.m. UK time, Marine Le Pen faces Emmanuel Macron. Last time round, it was a huge deal that really almost won Macron the election. Credit Suisse, one of our biggest corporate stories today, coming out saying that they will have to, that they're basically struggling to book some of the value because of Russia. They're reporting also earnings on Tuesday. Credit Suisse down some 1.8%. Now, U.S. 10-year real yields have turned positive for the first time since 2020. Investors pricing in a more aggressive Federal Reserve as it tries to bring inflation under control. Now, here's what two regional Fed chiefs had to say on the issue.
Obviously, if inflation for some reason began to reaccelerate, I think that would be a cause of great concern. I think that, you know, on a path that included these 9 increases for this year, by, you know, December, on the way to December, you'd be looking for any confirmation of the storyline.
We have to make forecasts, and we do our best. But things like China, supply chains, new variants, what happens in Ukraine, those are giant elephants that are going to determine what happens to our economy as well.
Now let's get into the key market drivers with our markets editor, Christina Aquino. Christine, it's all about real yields, finally positive. What does it mean for the assets that will win and lose the most?
Well, Francine, I think your market roundup sums it up really well. You know, bonds are slightly up today. That makes a lot of sense because it's finally attractive for investors to get into these fixed income securities. Stocks are slightly softer, particularly in the U.S., because that's where you find those highly valued growth sector stocks. And Europe is enjoying this a little bit because it is the land of value, and you know, it's an environment that makes sense when you see real yields kind of turning positive and giving a little bit of boost for the bonds. It's also a bit of a boon for some of these cheaper stocks, especially compared to the U.S.
Christine, talking about divergence, so you're talking about divergence of stocks, but what do you do with, for example, U.S., China, and how, you know, in terms of growth, in terms of also what central banks are doing?
Yeah, it's very interesting, Francine, because the narrative of slower Chinese growth is really, really taking hold, and you can see the PBOC wanting to respond to that by delivering some easing measures that are both broad and targeted. We saw the latest round of measures really taking a look at that credit sector in particular, and of course the weaker yuan playing into this as well. I mean, some of the divergence we're already seeing play out in FX, again, by way of a stronger U.S. dollar versus a weaker yuan. We're also seeing that playing out in the bond markets because, and this is part of the positive real yield, U.S. real yield story, right? That rate differential argument that had been a benefit to Chinese bonds in the past, you know, is really disappearing. I think the premium of Chinese bonds over treasuries is very, very little now, if not completely gone. And that is very much a consequence of what we've seen, the divergence in the Chinese and U.S. economies.
Christine, talk to me about Netflix. So the school of thought says, look, they just don't have the content, so people will migrate to Amazon and Apple TV. Others saying, look, if inflation's going up, you cut your spending and the streaming services go first. Actually, pre-market, we also need to watch pre-market, otherwise my producer will put me in the doghouse. Pre-market, it's down 25 or 35%, 25%. There you go, Netflix down 25%. I mean, it's ugly.
Yeah, massive, massive loss for Netflix. And yeah, very interesting narratives that are playing out. It really depends, you know, whether you're a bull or a bear. You can, it's a plethora of narratives that you can latch onto. But another interesting take on this that I've seen is that this could actually be a sign that those lockdown pandemic era plays are really, their moment is over, you know, because people are going out into the real world and spending elsewhere. So it could potentially be a reallocation of consumer spending because we are seeing consumer spending still up based on credit card data from the major banks last week. You know, it's not that it's gone away. It's perhaps just going to different things, you know, spending on, I don't know, travel or, yeah,
or better content on TV.
Exactly.
Christine,
yeah.
Thank you so much. Christina Aquino there, our markets editor. Now, to talk about all of this, I don't see him as a Netflix and chill kind of guy. It's Lord Jim O'Neill. He's former Goldman Sachs Asset Management. He is, of course, also ex-UK government minister. Jim, I don't have you as a Netflix and chill, but actually, have you had to be sedated after the football last night?
I was going to say, I wish I was watching Netflix last night than watching United getting stuffed against Liverpool. Netflix would have been very useful last night.
I mean, I thought it was horrific. I know you thought it was horrific, but you know, not unexpected. Also, for those who don't know, Jim O'Neill is literally the biggest football fan.
I think.
Hello, traders. Are you ready to trade Bitcoin? I'm placing an order to sell Bitcoin, sell short at price 41,418. Okay, if you're looking to trade Bitcoin, please place your trade at this level and wait until it will reach this level and price will be filled. Okay, if you want to get the strategy, please go to company.co.uk where you can purchase the strategy and to see and learn how we trade. Okay. Also, a new seminar, it's webinar, available dates available on the website. Please go to companyeye.co.uk website, and you can register for our webinar at the end of this month. It will be live webinar, so you can ask any questions you like. Okay, I'll speak to you later.
Interesting to see how the final days of the Chelsea buyout goes on, because that obviously does suggest one can put consortiums together to do this sort of thing, let's say. But against that, if Chelsea goes anywhere near the talk of £2.7 billion, the kind of money to extract United away from these dreadful owners will be probably more than that, possibly substantially more. And it doesn't seem like it's very attractive in terms of value.
Okay, I do also need to go back to my wheelhouse, which is real yield, Jim. I'm not really sure how to go from like football to that, but actually it just goes back to repricing of markets. Maybe it goes to repricing on some of these football clubs, whether you agree with it or not. Real yields going up. What does that mean? Finally, I guess, is what a lot of people in the market would say. But why is the market readjusting now and not two months ago?
You know, it's a very interesting question, and it's something that I think is really necessary. I've become more and more of the opinion over the past 12 months that we've been living in fantasy land with the way that QE has just gone on and on and on, and it serves no great economic purpose. It actually serves a social dispurpose. It does make the likes of ownership of Manchester United by the Glaziers easier because they can refinance their debts periodically so much easier at these artificially low real rates. And it is, you joked about it, but the parallel is very strong with parts of the tech sector. And I think the reasons that are driving it are twofold. One is, of course, we have inflation now no longer being regarded as transitory by central banks, so they're having to get in front of the game, as you've seen from some of these Fed comments overnight. But the second thing, which is something I wrote about for Project Syndicate recently, which I think is a more powerful development perhaps than I see discussed relative to others, is that the whole freezing of Russia's central bank assets raises the whole notion of the much discussed global savings glut of the past 20 years actually no longer having a lot of substantial legs. Why if you're central bank X in Asia, why are you going to keep accumulating foreign exchange reserves anymore?
Jim, you need to come and co-anchor with me. You're stealing my thunder. This is what we're going to talk about next. Is it the end of the global savings club? We'll be back with Jim O'Neill. Also coming up later on in the program, we talk with Henrik Dutoit. He's the chief executive of Asset Manager 91. But up next, as Jim was saying, we talk, of course, about the savings glut with Jim. Don't forget to send in your questions to IB Plus TV Go. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Welcome back. This is Bloomberg Surveillance Early Edition. Now back with us, leading British economist Jim O'Neill. He's also known for coining the acronym BRICS. This will haunt him for the rest of his days. It stands for Brazil, Russia, India, and China, as they were the main emerging economies in 2001. The term since lost its significance due to the diverging nature of each country's economic development. Now, Jim, actually, what you're really on to talk about is the end of the global savings glut, which was a wonderful piece you've also written for Project Syndicate. What does this tell us about what kind of markets, but also what kind of economy we'll live through in the next 2 to 3 years?
Well, there's more and more things that come out that it makes you, somebody certainly of my generation, find it impossible to avoid constant reference to the 1970s and periodic market focuses or foci on so-called stagflation. But on the savings glut, you know, as I wrote in that piece, I was always a little bit skeptical about its true academic strength as an argument. It was popularized by Ben Bernanke before he became Fed president. You know, in essence, the argument was all these countries with massive savings in Asia, particularly China following Japan, would just keep on accumulating foreign exchange reserves and keep on piling them into risk-free assets in the West, particularly U.S. Treasuries. I don't really believe that theory is as powerful as was perpetuated, but crucially in the context of central bank behavior, it became a very persuasive self-justification for pursuing a very accommodative monetary policy. And now with the end of the with the freezing of Russia's central bank assets, you know, ask yourself, Fran, if you were running the central bank of China or central bank of Kazakhstan, would you keep buying foreign exchange reserves to just put them in U.S. Treasuries or Euro bonds on the risk that if you did something wrong, they might be frozen? I think at the margin, the answer is almost definitely not as many, and maybe no, I wouldn't. So,
Jim, what does it mean?
We might have seen peak foreign exchange reserves.
Right, and Jim, so does it mean that we're seeing the end of the dollar as the dominant currency, and how long, in terms of time frame, does it take for that to go away?
I mean, what I think it really means, it adds into the mix of the inflation issue that's come onto the scene, is that it might indeed be the beginning of the end of a 40-year bull market in bond markets. That would be the biggest consequence, which has all sorts of consequences for everything. On the dollar, I'm not sure. It could be, because obviously US bonds are by far and away the biggest part of this global savings story. But, you know, because of the Western alliance, it's not just US bonds that have been frozen with Russia, it's also those of the Euro area and those of Japan and Australia and so on. So it's not itself directly dollar specific, but because there's so many other issues that go on, it might well be in parallel that this finally forces some places like China to think, well, we have to come up with a true alternative where we can store liquidity and allow people to more genuinely use our currency. And at some point in the future, that will happen. Whether that's this week or next week, who knows?
Jim, thank you so much, as always, for your brilliant thoughts. Jim O'Neill there, of course, on all the game changer for some of the Treasury holdings and dollar reserves. Now, coming up, we're live in Helsinki as Finland debates ditching neutrality and joining the NATO alliance. That's coming up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy. If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts, great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Finland's parliament is today debating whether the country should drop its policy of neutrality and join NATO. Now, both Finland and neighboring Sweden say they are stepping up consideration of the issue in the wake of Russia's invasion of Ukraine. Now, let's get more of Bloomberg's Maria Tadeo, who's in Helsinki for us with a guest. Maria, over to you.
Yes, Francine, what a day to be here in Helsinki. This big decision about NATO that is, of course, sending shockwaves to the region. As you say, it's not just Finland, it is Sweden. But today, of course, the focus is on Finnish politics. And to talk about it, we're now, of course, joined by Jonio Vaska. Thank you so much for being here. You said that this is a debate that you expect is going to go on for hours. But I know that you're manifestly in favor and you are going to campaign for NATO. So the obvious question is, why now?
Well, we all know what happened in 24th of February, and that changed everything. We have had very strong line in Finnish foreign and security policy, but now it's changed. It's totally changed. Our neighbor, has it changed? Well, maybe there has been signs for it already, but I think now Finland, it's time to make another decision and show our way and our new decisions.
And this decision, your Prime Minister Sanna Marin said we need to make it in weeks. This is not months. We need to do it quickly. Do you expect to see a big majority here? And ultimately, I guess the question is, are you going to be in a position to apply by June? That is seen as a deadline?
I think there is already quite big majority. As we see in the polls, the Finns have changed their views, and the ideas totally what they have thought before about NATO, and so it's at the parliament. But now we need a process. We have to take care about hearings and listening different officers and people who are working with NATO issues and also security policy issues. So that's why today this is a very meaningful debate to start with and to take this issue to different committees.
And the government has made it clear they want this done by June, when there's a very important NATO summit that's expected to happen. But I wonder, you say the public perception has changed. You share a major border with Russia. You have a complicated history with Russia in the past. Do you fear perhaps that Russia could retaliate if you put forward this nomination? The Russians are saying for us it could be a problem.
Well, we all know what Russia thinks about NATO. And we will take care. We will take care of it, but we don't let that to make any difference to our decisions. We make our own decisions here, from our own perspective, and what we think what is best for the Finns and the security of the whole Nordic.
And what you say now in this white paper also was presented last week is that essentially you now name Russia as your biggest issue when it comes to foreign policy and security. So the question is this your biggest threat? Do you look at Russia and actually now see a dangerous neighbor?
Well, I think we don't have to think about different, Russia is only threats. We have every kind of threats that now we have to talk about.
Okay, guys, as you can see, position opened on Bitcoin. This is short position at 41,000, 118. Okay, stay safe, stay with me. All of you guys who decided to copy this trade, you have the chance because it moved higher to sell short at the higher level. Otherwise, stay with me and we will close this trade together in profit. Stay safe.
I think still we have to be quite fast.
And get it done quickly. Well, thank you so much, Mr. Vaska, for joining us here today in Helsinki on this decision, Francine, which is meaningful. I mean, this is undoing decades of foreign policy happening in real time and very quickly as a result of the war in Ukraine. But the goal of this government seems to be get it done in weeks, be able to present it in June, and then you would have a new member joining NATO. Again, it's a huge change to the face of European defense, Francine.
Yeah, and of course, everyone was wondering how Vladimir Putin would take that if it were to happen. Maria Tadeo reporting live from Helsinki. Coming up, we speak to Hendrik de Toit, the chief executive of Asset Manager 91. Send in your questions on IB Plus TV Go. That's next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Chicago Fed President Charles Evans expects the Fed rates to go beyond neutral next year, while Atlanta Fed President Raphael Bostic says the central bank should retain some caution. Cancel culture Netflix plunges 25% pre-market as it loses customers for the first time in a decade and signals more pain ahead. And stay with Bloomberg Surveillance Early Edition. This hour, we speak with Hendrik Dutoit, the Chief Executive of Asset Manager 91. You can send in your questions on IB plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Let's check on the markets because they're not dull at all. If you look at European Stock 600, they're actually holding on to the gains 0.4% higher. U.S. indices, though, the futures are actually falling. Again, investors weighing the impact of rising real yields on the appeal of riskier assets, which is why we're seeing a bit of pressure on the NASDAQ futures, down 0.7%. Netflix also dampening some of the earnings season outlook. And then you have, of course, all the question of what that means for yen at 128.64, rebounding from a 13-day slump, gold extending its decline. The other story we're watching out for, and we had a great roundup by our reporter on the ground, that is, of course, our Marian Hoftmeyer, is Credit Suisse. Now, they're coming out with earnings next Tuesday. They're signaling today that their first quarter loss, or that they will have a first quarter loss because of Russia and some of the legal provisions that were previously indicated. We're just trying to figure out when Credit Suisse will catch a break, if anytime soon. That stock price down 1.7%. Now, streaming giant Netflix is losing customers for the first time in 10 years, with shares tumbling in pre-market down 25%. Despite hits such as Bridgerton and Squid Game, co-chief executive Reed Hastings says he's planning to create a lower-price version of Netflix services that includes advertising.
I'm a bigger fan of consumer choice, and allowing consumers who would like to have a lower price and are advertising tolerant get what they want makes a lot of sense. So that's something we're looking at now. We're trying to figure out over the next year or two.
Well, Bloomberg's Laura Wright has been across the results. Now, Laura, the question is it because they don't have good enough content, because content is king, or is it because people are cutting subscriptions because they worry about inflation and household spending?
Really, inflation and household spending is the primary reason. Francine, minus 200,000 subscribers for the first quarter, well below the street's estimate, which was for an addition of 2 million. Netflix withdrawing from their Russian operation certainly played a role, but the forecasts for the current quarter even worse, minus 2 million users. Now, Netflix are facing a trio of headwinds. Of course, the cost of living, inflation at the forefront of consumers' minds, economic reopening, and increased competition, the likes of Disney Plus and Amazon Prime. This year alone, both Netflix and Prime, they've both increased their prices to deal with the rising costs of studio and extra production costs. Disney Plus remains the younger platform. It's why it's cheaper. They're trying to gain more market share. And Netflix, they reference the conundrum, what to do with the 100 million households who piggyback off existing users' accounts. Netflix, it's lost its position as one of the pandemic darlings off the back of that tech rout the end of last year and the subscriber revision downgrade in early January. But as we saw in that clip earlier, Francine, one way to entice new customers onto the platform is to reduce the price, and that will include advertisements. But we'll have to see, Francine. Content is king. The latest thing I watched was Bad Vegan.
Yeah, I didn't watch anything on Netflix recently, which maybe I'm part of the problem. Thank you so much, our Laura right there looking at Netflix. Now, U.S. 10-year real yields turning positive overnight for the first time since 2020. Investors are pricing in a more aggressive Federal Reserve as it tries to bring inflation under control. Now, here's what two regional Fed chiefs had to say on the issue.
Obviously, if inflation for some reason began to reaccelerate, I think that would be a cause of great concern. I think that, you know, on a path that included these 9 increases for this year by, you know, December, on the way to December, you'd be looking for any confirmation of the storyline.
1 year from now, that's a really hard forecast to make. I mean, we have to make forecasts and we do our best. But things like China, supply chains, new variants, what happens in Ukraine, those are giant elephants that are going to determine what happens to our economy as well.
Well, joining us now is Hendrik du Toit, Chief Executive Officer of asset management firm 91. Hendrik, as always, thank you so much for joining us. Look, okay, we finally have a U.S. Real yield that's positive. How big a deal is this? Could it rip up the global markets?
Francine, firstly, real yield is actually the normal state of affairs.
We forget.
We've been in a very unusual world. And in that sense, I think this will allow capital markets over time to normalize, to price risk appropriately, and probably avoid bubbles. So I'm a child of the 70s, you know, when I got my mind in the 70s, my economic mind, and in the 80s, which means I've seen what havoc indiscipline, particularly financial indiscipline, can impose on society. So I'm not too worried, but short term, this is going to lead to volatility, readjustment of asset portfolios.
Yeah, I was going to say, I mean, yesterday it was funny. I had a coffee actually with a pretty big person in the hedge fund world, and he was telling me about his thesis of inflation like 3 decades ago, and how interesting, because not a lot of people realize what it did in the 70s and 80s. What does it mean for where you see money coming out? Like, are you readjusting, you know, some of your portfolios? And again, why did we not see this coming?
I think some of us saw it coming, but it's very difficult to fight market forces when you get crowded markets, narrow markets, enforcing very different levels of valuation for what actually should be fairly similar cash flows. It's very difficult to fight the markets, and I think investment managers tend to live closer to markets rather than far away, because they simply don't have the luxury. They have withdrawal of assets. But we were all awaiting for this. We've been planning for this. I've been saying on the show actually for a long time, you want robust balance sheets, etc. You don't want excessive gearing, and that is now really playing out.
Yeah, so the tech stocks, what, you just dump?
Yes. No, I wouldn't just dump them. I would say tech, if you look at the last 10 years, I mean, we've had a very narrow tech leadership. But if you look at the last 5, 10 years, not just 3 and 1, tech has done exceptionally well against everything for structural reasons. But there's a point, as we saw in the Netflix case, where you actually say this growth can't be priced forever, and the market regains a certain sense of caution, which is what's happening right now.
So Netflix is more of a valuation problem. You don't see it as a business model problem.
Great business.
It's a great business, but are people migrating to Apple TV, or are they migrating to Amazon? Is it a crowded space?
It's the big animals, the big beasts starting to regain composure and taking back market share that they can take, and Netflix will have to live within that world. Right. Doesn't mean that Netflix isn't the leader, isn't going to be a winner for long run, but at the right price.
So you're telling me this is like a welcome correction?
I think if you do what we do, i.e. you professionally invest in markets, you use very tried and tested methods, one appreciates having a discount rate that is positive. Right. One appreciates risk being priced appropriately. But I think we're going to have political interference in markets for a while, which means you're not going to have an easy run, a very predictable market, because there are other things at play.
So what do you mean? This is what central bank policy, that they're
central banks behind the curve, a world that is moving from a unipolar to a multipolar world in a very messy way, which means the rules basis. I mean, what we see now in supply chain shortages is not just Ukraine. It started under the Trump regime, or Trump government, and you've had a ripping off of an order that has served humanity quite well for a long time, and the world is adjusting, and there is obviously pain points in that process.
And that's not priced in the market. So are you expecting more supply chain dislocations? And so if you're more nationalist, or at least if you change supply chains from parts of the world closer to home, it's automatically inflationary, isn't it?
Not necessarily, but it's costly. Look, inflation is sustained price pressure over time, not price shock. So, you know, but that price shock can upset and can change behavior, which may lead to inflationary demands being built into an economy.
But inflationary costlier isn't the same thing, or is it relative?
Inflation is sustained price pressure over time as opposed to single cost adjustments. Very important people remember that.
Yeah,
so that's the same point with oil now. Is oil going to stay where it is, or is there an energy transition coming? We don't know. That's the million-dollar question.
Okay, we'll talk about that. You've front-run me. Henrik de Toit there, Chief Executive Officer of Asset Management Firm 91, stays with us. We'll have a lot more with Henrik a little bit later on in the program, and we're going to talk about this idea of supply shock. Coming up, as Ukrainian defenders in the city of Mariupol say they are outnumbered by Russian forces, we'll bring you analysis of the situation. We speak to Leslie Vinjamuri from Chatham House next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Ukrainian defenders at a steel plant in the port city of Mariupol have said they are outnumbered and have appealed to world leaders for help. This, as Russia sets a new deadline for later this afternoon for Ukrainians in the area to lay down their arms and surrender. Well, Ukraine's deputy prime minister says the humanitarian situation there is catastrophic. Joining us now for analysis on the wider situation is Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House. Leslie, of course, the most difficult question is we're also talking about Finland and Sweden accessing NATO. Unclear how Vladimir Putin would put that. But, I mean, from where you stand, and you're an expert really in geopolitics, and from the U.S. perspective, how could this end?
Well, I think that the very sad reality is that there is no immediate end in sight. And of course, what Russia and Putin in particular are witnessing is exactly what he didn't want to see: Western unity, probably more NATO expansion if Sweden and Finland do move forward and NATO accepts their membership. And NATO, of course, as we know, has been one of the things that he has protested the most over several months, over several years. But I think that, the offensive in Donbass's decision to really double down there while still, the fight is ongoing in Mariupol show, and the Ukrainian resistance, right? The determination of the Ukrainian forces to fight, and of the West to continue arming, to continue the sanctions, to try and to escalate those sanctions. None of this shows any likelihood of receding anytime soon. And the question now, of course, is, if we think ahead to this week, we've got the IMF, the World Bank meetings in Washington. There's a real struggle now for how the rest of the world beyond the West, maintaining Western unity, number one. Number two, what happens to India? What happens to the global South in this discussion of the war? Because the real risk is of a real fracturing, I think, as we move forward.
Leslie, do you see this fracturing? I mean, one of the conversations that we were having around the economy is also, if you're China, why would you buy treasuries if then they can do to you what the West is doing to Russia in terms of sanctions? So again, are we underestimating the profound impact this could have in terms of a fractured world?
Well, I think there is a potential for that, and that is certainly what the Biden administration will be thinking about, what Europeans should and undoubtedly are thinking about as they approach these meetings, is that there's got to be global solutions for making, an increasingly difficult global economic situation, inflation, and the likely impact and policy response to that, which will hit the global South. If the United States wishes to broaden its coalition of support in this struggle with Russia, it's going to have to come up with the realistic solutions where the consequences aren't so grave economically. And I think that, again, we're seeing some struggles with getting greater sanctions together in the U.S. We're seeing pushback across the West. We're seeing pushback within Germany from the unions on the question of further prospects for energy sanctions. And across the rest of the world, there's a potential for very significant consequences.
Yeah. Leslie, do you see actually China boosting strategic ties with Russia? And what does this mean for the rest of the world?
I think this has been, one of the most concerning things that we all know. We've heard from many people, and I think it's exactly true that China hasn't wished for this kind of war, hasn't wished for war in general, would prefer, stability in the global economy so it can continue its economic and strategic objectives, but it hasn't been willing to pull the plug on Russia. It's maintained a very fine balance, and there's a real concern that absent effective diplomacy, that this relationship between Russia and China will become stronger, not weaker, that it will extend beyond that bilateral partnership, and again, with very significant potential consequences. I think the question here now for the United States, for Europe, is how to maintain a very firm line when it comes to Russia in the face of grave atrocities, a very devastating and destructive war, while trying to pursue diplomacy that doesn't push others further away.
Yeah, that fine line. Thank you so much, Leslie. As always, Leslie Vinjamuri, Director of the U.S. and Americas Program at Chatham House. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sources say private equity firms, including Blackstone and Vista Equity, have ruled out financing Elon Musk's takeover bid for Twitter. Brookfield Asset Management is also said to have opted against backstopping Musk's unsolicited offer at $43 billion. The deal would be one of the largest leverage bailouts on record if it does go ahead. And the days of free lunch are over at Goldman Sachs. The investment bank said that it's transitioning back to the paid-for-meal service for breakfast and lunch on April the 25th, scrapping a pandemic perk. Wall Street firms have used free food as part of the push to bring employees back to their desks during a pandemic that has fueled the rise of hybrid schedules and remote work. Goldman has been one of the most aggressive financial firms in pushing for a return to the office. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, could Russia's war in Ukraine mark a turning point in the world's reliance on the U.S. dollar? That's one of the key points from Global Investment Manager 91. We'll get more with the Chief Executive, Hendrik du Toit. That's coming up next, and this is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now, could Russia's war in Ukraine mark a turning point in the world's reliance on the U.S. dollar? That's one of the talking points from the global investment manager 91. And now they say weaponizing finance to punish Russia for its invasion could prove an expensive decision for the West and give rise to a more fragmented financial system. Well, we're back with Hendrik du Toit, chief executive of 91, who's back with us. Hendrik, I mean, this is a key point. And actually, you know, if the Fed starts normalizing selling treasuries, like who would buy them? If you're China, if you're Kazakhstan, if you're any other central bank, and you say, right, well, you know, I could do something that at some point would make the Americans angry, why would I buy treasuries?
And who owns the growing reserves? Those are right now the oil producers or the energy producers. So we have an interdependent global financial system which we built after the Bretton Woods collapse in the 73 change in the arrangements. And we need to understand that that served humanity well. If we are now going to overly weaponize the US dollar, there may be a period of not only instability, but a lack of capital where most needed. Now, the US, for example, as the anchor of the global economy at the moment, needs capital. It actually is a significantly reliant on foreign bond purchases.
But are we underestimating the deep impact? I mean, I was looking back at some of the debates we did in Davos, and there, you know, there was one 5 years ago looking at devaluation of currencies. I mean, that was so quaint because that was our only concern. Now there's like concerns coming at it from all sides.
And I think being no expert of crypto was a canary in the coal mine. There were people saying there is a problem down the line. And to me, what we need right now in the world, two things. We need political diplomacy. We have virtually none of that right now. We have screaming. And without that, you're not...
Whose job is that, though? The U.S.?
It is all sensible and civilized nations. And we need to... even people who are reprehensible should be spoken to, because otherwise the shooting continues, unless you're willing to wage war. Second point is we need financial diplomacy and leadership, and that has to come from the US and China to work out an order, because the more you threaten this weaponization, the more the withdrawal will be, and the more the implications for trade finance, for ordinary investment flows, and I don't think that is good for the world, period.
I mean, I was going to equip that, you know, Emmanuel Macron, certainly on the phone with Vladimir Putin, we think a number of times. But, I mean, this is all political and geopolitical, big thinking questions. As a market participants, do they think it doesn't touch them? And is that a wrong assumption?
I think it's... I mean, the markets have for a long time lived in a world of extreme political and structural stability, i.e. falling interest rates, falling inflation, benign economic and trade environment, and kind of unlearned to be sensitive to that. I think we're in a phase now where we have to be extremely sensitive. And one of the things we've put into our next 10-year scenario planning now is the question of what does bigger state in market and in non-market economies mean to all of us? And I think we have to apply our minds and be very, very aware of the risks, as we've seen of late.
Okay, what does it mean? Market dislocations?
I think it means being very careful when you go to anything that is near political risk or priced to perfection. So, for example, treasuries were priced to perfection a year ago. They have lost about 7 or 8%. That is the low-risk asset, because we were assuming perfection, no rise in inflation, no change in the interest rate environment. It was just wrong.
So all of this, what does it mean for ESG? Is now that on the back burner because we're dealing with,
not at
oil
all.
shocks?
ESG is front and center. And I can give you the 91 perspective. We still think the one thing we cannot forget is the sustainability challenge, and particularly the decarbonization challenge. And
that's your take, but the market is also aware of this?
Markets are all over, because some people are interpreting ESG as interference on every social issue. Some people are saying most countries in the world are not investable. Well, if that's the case, you're not going to have a better world.
All right. On that note, maybe we leave it there. Hendrik, thank you so much. Hendrik de Toit there, Chief Executive of 91, joining us this morning. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Katie Lyons in New York, or Anna Edwards here in London. I know they'll take you through some of the market moves, huge market moves that we've seen after the real yield finally in positive territory. U.S. futures seeing a bit of pressure. Their investors are weighing the impact of rising real yields, for example, on the appeal of some of the riskier, the richer valuations. Netflix also dampening the earnings season outlook. If you look at what the impact of U.S. 10-year real yield turning positive is, it's the first time since March 2020, and of course it could reprice the markets in all asset classes and also across the globe. So that conversation next. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Crypto, you have a world of young people that want their own financial system and their own culture. and it is very powerful, and I'm a big believer in it.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's been a brutal year for big tech.
I think you've got to look kind of beneath the hood of the market a little bit there.
Talking about growth again and talking about valuations and talking about equities is very critical.
The issue that's facing tech isn't so much a fundamental issue as it is a valuation issue.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, April 20th. Our top stories today. Netflix shares are dropping in pre-market trading after losing customers for the first time in a decade. Meanwhile, it's Tesla's turn in the spotlight. The electric car maker reports earnings as its CEO, Elon Musk, keeps pursuing Twitter. Investors weigh the impact of rising real yields. High-priced tech stocks are likely to be under the most pressure as the move undermines valuations. And Ukrainian troops risk being encircled by that new Russian offensive as China says it wants to increase its strategic ties with Moscow. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, plenty to talk about on the geopolitical front, which we'll do later in the program. But from a market's perspective, the focus firmly on technology as we approach the US session with higher real yields and Netflix earnings in focus.
Yeah, tech is absolutely front and center, Anna. So too is the monetary policy picture here in the US as well as in Asia, where policy is a lot easier, at least in China and especially in Japan. Now, I would note from an equity perspective, it was a mostly up day in Asia overnight. The exception, though, really was Chinese stocks. They were down about 1.5%. You did not get an LPR cut overnight. That was what investors were hoping for, that policy would be continuing to ease in the face of some of the economic challenges the country is facing due to its COVID-0 policy, but instead that was held, so that disappointing investors a bit. Policy, though, definitely is easy in Japan, and the BOJ is committing to that easy policy with another bond buying program overnight, really trying to keep that JGB yield under the 25 basis point cap, having some success in doing so. That's basically where we are trading at the moment. Japanese equities giving a lift. What's interesting, though, is that you aren't seeing weakness in the Japanese yen as we have been seeing so often in recent weeks, even as the BOJ really doubles down on keeping policy easy. A little bit of yen strength coming through. 128.43 is where we trade, Matt, although that is still right around the weakest level in about 20 years.
Yeah, 128 yen. That's going to make U.S. car makers happy for $1. Let's take a look at what's going on here in the U.S. Nothing to do with car makers really today. It's all about Netflix. S&P futures down 0.25%. And remember, the S&P was up 1.6% yesterday. The NASDAQ had even bigger gains. Netflix itself was gaining more than 3%. So we'll see a lot more about Netflix throughout the program, but that's really going to drag on U.S. equities today. The 10-year yield at 2.90, coming down just a little bit, but also holding near highs that we haven't seen since 2018. NYMEX crude bouncing back a bit at a relatively high 103.66 a barrel for Texas Intermediate, and Bitcoin coming up as well. So this is interesting. The Bitcoin gain on a day when it looks like futures and the cash trade are going to come down after the bounce yesterday and after the really disappointing. I think for some people, Nathan Moffat called it shocking. So it's a huge about face, he said, in terms of what Netflix has been delivering.
Yeah, and what does it tell us about that business model? What does it tell us about the U.S. consumer? Many ways to explore that story, and we will do that. Let's get to the European trading picture then, Matt. And we've got European equity markets actually playing catch-up with the United States. So Matt mentioned there the gains we saw on Wall Street yesterday, and so European equity markets really catching up with that, even though that is yesterday's story. And the fact we see a pause in what seems to be that higher and higher yield story, perhaps that giving investors a reason to buy risk assets as well. Interesting to see that technology stocks are the best performing here in Europe. Europe this morning, or they have been for much of this morning's session. Technology here in Europe, of course, a very different beast to technology over in the United States when it comes to business models, where it drives its profits and the level of profitability, of course. I put in the German Bund yield. I could have put in the UK gilt yield as well, just to underscore that we have seen a change in that particular story, or at least a pause in that story. We had been talking for weeks and weeks about higher yields. Today is a day where that story pauses for breath just a little bit. A lot of corporate earnings stories, or the preamble to corporate earnings stories coming through today here in European equities, and that's really interesting for us to note. Credit Suisse, that stock down by 1.4%. They've warned they're going to make a loss in the first quarter. This is the 5th time in the last 6 quarters they've had to issue a profit warning. This is to do with provisioning for legal costs, but it's also to do with the war in Ukraine. This is the Danone share price, the dairy business over in France, up by more than 8%. A French newspaper reporting there could be interest from a rival. Danone says, though, that it is committed to all parts of its business. Heineken, the drinks company, up by more than 3%. Apparently, consumers are returning to pubs and to bars and drinking again, despite the fact that it's going to cost them more to do so. We did see that some of the gains driven by Heineken in the last quarter in terms of increased revenue were driven specifically by their pricing power, their ability to pass on those costs and put up those prices. These are some Russian assets for you. The focus very much on the ground, though, really away from what's going on in terms of Russian markets, really on what Russia is doing over in Ukraine. That is really the focus for us at this point. Interesting to note from a corporate perspective, though, that Shell says it is pulling back some of its employees from Russian projects, Kaylee, which we'll continue to monitor as this just one of many, many European and global businesses that pulls out of that particular economy.
Yep, the list just continues to get longer and longer, Anna. Now let's take a look at what is ahead today. The Fed will be releasing its beige book at 2 p.m. New York time. There is also a key televised debate between French President Emmanuel Macron and his rival Marine Le Pen at 3 p.m. New York time. Remember, the second round of that election, the runoff, is on Sunday. And finally, in terms of earnings, Tesla will be reporting its results after the market close, Matt.
Yeah, that's one we'll be watching very closely. So streaming giant Netflix, I said we're going to focus on it. Losing customers for the first time in a decade. Management is pointing to growing competition and the sharing of passwords. And I've got to issue a little bit of a surveillance correct here. I'm a little bit worried that Tom Keene's going to be incredibly disappointed in me. I called Michael Nathanson of Moffett-Nathanson, Nathan Moffetson. But you can see how I make that kind of mistake, right? Let's get over to Laura Wright right now. She's got the details on Netflix. Laura?
Thanks, Bob. Well, minus 200,000 subscribers in the first quarter. That is well below the average analyst estimate. They had expected an increase of 2 million. Yes, the war in Ukraine played a role because Netflix, they're withdrawing their operations in Russia. But even so, the projections for the current quarter, a loss of 2 million users. Now, Netflix, they're facing a trio of headwinds: inflation, the increased cost of living, competition, and economic reopening. The opportunity cost of Netflix and chill, or going out to restaurants, bars, seeing people in real life. Interestingly, both Netflix and Amazon Prime, well, they've increased their prices in the first 3 months of this year to combat higher studio costs. Disney Plus is the younger platform. That's why it's much cheaper. Disney's still trying to gain market share. And on the earnings call, we learned about the parasites, the households who piggyback off existing customers. Netflix, as you mentioned, implementing password controls. And in order to entice more customers onto the platform, they will create a cheaper advertising service.
Laura, we are going to get numbers from other tech giants, other giants of the US reporting season, the likes of Tesla. But we know that Tesla's boss has perhaps been distracted of late, and he's been putting out further cryptic clues about what his intentions are around Twitter. Bring us up to date.
Yeah, cryptic clues indeed, and that perhaps suggests why Tesla trading to the downside in the pre-market, because if Elon Musk is to go ahead with a private takeover, likely he'll have to sell some of his Tesla stock, which would send a negative sign to the existing shareholders. Now, this tweet in particular, something is the night. Is this a reference to a tender offer, coining the Scott Fitzgerald novel Tender is the Night? Or is it simply a reference to 420 amongst the cannabis community, which it is today? Now, that $43 billion unsolicited takeover, we're still waiting for a response from Twitter's board, but they have begun implementing some defensive measures. And a few private equity firms, such as Blackstone, Vista Equity, they've tried to distance themselves from the deal. But the world's wealthiest person, he's a polarizing figure. He likes to use a polarizing social media platform. And unsurprisingly, this is a polarizing takeover approach.
Yeah, not surprising at all. We will continue to watch this saga play out and continue trying to dissect and understand what exactly Elon Musk is talking about on Twitter. Thank you so much to Bloomberg's Laura Wright. Let's turn to monetary policy now. Chicago Fed President Charles Evans says he expects interest rates to rise above the level that neither restrains nor speeds up the economy next year. He addressed the Economic Club of New York yesterday.
Probably we are going beyond neutral. I mean, that's my expectation. When I see that taking out special factors, I'm still left with 3 to 3.5% inflation. That's not what we want. If the 2.5% inflation rate, I think we have more things to ponder there.
Meanwhile, Atlanta Fed President Raphael Bostic is wary of hiking rates to cool inflation. He said he's reluctant to support a, quote, long way beyond our neutral place. Well, the Fed's aggressively hawkish stance, maybe Raphael Bostic aside, has driven a turnaround in 10-year real rates as well. Let's get to Bloomberg's Danny Berger. Danny, it was for a relatively brief moment in time, but we were positive.
Yeah, we were positive, we're negative again, but of course it's this positive number that everybody freaks out at. Okay, is this the end of TINA? Do stocks not look as attractive because on that valuation metric, they don't look as good compared to real yields anymore? This was really held up as the pillar of why people were moving up the risk curve. But despite all of that, despite the assumed impact on stocks, on corporate credit, on the dollar, markets have been relatively well behaved overnight. We even saw U.S. stocks rally yesterday. So what is going on here? I was talking to Mark Cudmore about this earlier, and this is a chart for our radio listening audience of U.S. financial conditions from Bloomberg, but it's the plus index. So this is going to include some bubble metrics as well, like the housing market. Currently, in the past month or so, we have seen the loosest conditions that we have on record. They've been looser than the dot-com bubble, than the housing market as well. So until we start to see financial conditions really tighten, it's likely that stocks aren't going to face anything close to a bear market, Anna.
There's tightening versus recent history, and then there's tight conditions, and the two are not necessarily the same. Talk us through this really interesting story around JP Morgan losing its lead role on a senior underwriting role at one particular business in China, but does it have a bigger picture story to tell us?
I think the story is all about the bigger picture, Anna, because this deal itself, it's pretty small, just about $100 million is what we're expecting the underwriting to be for this company. It's called Kingsoft Cloud. It's going to list in Hong Kong. It's going to IPO there. It's a cloud company, as their name implies. Basically, you had a sell-side researcher over at JP Morgan cutting their price target on Kingsoft, calling the entirety of the tech sector in China, in Hong Kong, uninvestable. And then off the back of that, according to people familiar, Kingsoft took JP Morgan off the lead of the IPO, but they're still on the deal. So those things do indicate, okay, this isn't, the biggest hit to JP Morgan, but it really is indicative of this awkward relationship between sell-side researchers and the investment bank. Sometimes smaller versions of this play out, like everybody on an earnings call saying, great quarter, guys, to much criticism and lament from market commentators. But still, it is a careful balance, and sometimes, despite whether anyone admits it or not, it can play out in this sort of format.
Congratulations on the great quarter.
Exactly. Great quarter, guys.
Yeah,
Great
I
quarter.
love that. Danny, thanks so much. Danny Berger there talking to us about what's going on in terms of treasuries as well as JP Morgan in China. Now let's get to Russia calling this right now the second phase of its war in Ukraine. Early indications are that it could go better for Russia than it did the first time. Russian forces threatening to encircle an area at the top of the Eastern Front that holds as much as 40% of Ukrainian troops in the region. Let's get to Bloomberg's Maria Tadeo. She's in Helsinki outside the Finnish parliament because they are set to debate today whether or not to join NATO. Maria, what's the latest first off on the ground in Ukraine?
Yes, and Matt, with the war in Ukraine, this is a battle for Donbass. Remember, the Ukrainian foreign minister, Dmytro Kuleba, told us this is a battle that is going to remind us of the Second World War. It's everything is banks, planes, heavy artillery, tanks, all of this happening, of course, in that eastern Ukraine border. For the two sides, for Russia and Ukraine, this is strategically incredibly important. For the Russians, of course, it would give them not just a land grab in the east, but potentially this bridge that they've wanted from years all the way to Crimea and then de facto to the Russian Federation. Federation. For the Ukrainians, of course, they feel that if they're able to repel this attack, they will go into the real talks, which, remember, many believes won't happen until the question of Donbass is settled with the upper hand. Now, Matt, of course, you alluded to me being in Helsinki today, and we talk about the real-life implications that the war in Ukraine is having, the reverberations that is throwing across Europe. Well, this is a country that is a prime example of that. Today, debating whether or not it wants to join NATO. It's about to undo decades of foreign policy. I've spoken to a number of officials here today that tell me Russia is now a threat to neighbors. We have a huge border with Russia, and we've seen at this point that economic ties, diplomatic ties, at times they just simply don't work. Russia is not scared to use force, and that's why it means that we should join NATO. The Prime Minister here of Finland says that this is a question that will have to be settled in weeks, not months, and the idea is that come June, Finland, but also Sweden, by the way, the Nordics, will officially apply to enter the alliance.
All right, Bloomberg's Maria Tadeo in Helsinki for us today. Thank you so much. Meanwhile, China says it will keep boosting strategic ties with Russia. A senior Chinese diplomat indicates the relationship remains solid despite growing concerns over allegations of war crimes in the invasion of Ukraine. Jack Fitzpatrick, Bloomberg government reporter, joins us now from D.C. Jack, the U.S. has warned China before about what would happen if it were to support Russia in any way. How is the U.S. likely to respond to this development?
Well, yes, the president himself has said that if China were to provide material aid to Russia, then there would be consequences for China. A little bit on the context of this statement, though, the vice foreign minister from China said that regardless of other international developments, the diplomatic relationship between China and Russia is important and will only increase. This was in the context of a significant increase in trade between the two countries in the first quarter of 2022. But keep in mind, much of that activity was before the invasion and before the sanctions from the West. There's actually a significant decrease in Chinese exports to Russia at the tail end of that time period. So this is a matter of reassuring words from China to Russia, but it doesn't necessarily tell us exactly what they mean when they talk about boosting diplomatic efforts. And if it is very significant, it would raise the question of if they're not providing military aid to Russia, at what point do American officials decide an increasing economic relationship constitutes some form of material support, which is exactly what President Biden has warned China about.
Jack, thanks very much for the update. Jack Fitzpatrick of Bloomberg Government joining us there from Washington. Coming up on this programme, Trevor Greetham, Royal London Asset Management's head of multi-asset. What does a very brief move into positive real yields move? What does it tell us more seriously about the longer term? And growing costs of Putin's war. Some Kremlin insiders fear the invasion was a catastrophic mistake, but see no chance of the president changing course. More from our big take story. That's still ahead. Plus, later today, Bank of America Chairman and CEO Brian Moynihan. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both radio and television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. Now, we just got headlines from Bank of America. Those strategists are going long the U.S. 10-year with a yield target of 2.25%. Right now, we see a 10-year yield at 2.90, so that would be a long way down from here, although we've come up from that level in fairly short order. I mean, just in the middle of March, we were below that, so it has taken less than a month for us to climb those, let me do the math quickly, 75 basis points, 65 basis points, sorry. Ksenia Galuchko, Bloomberg Equities team leader, joins us now out of London. Ksenia, you know, these things are all related, as we've seen, moves in yields in the equity market. What do you make of this call?
It is a very interesting time. So finally, bond yields are starting to compete with equity returns. So you would think that more and more investors would be going long treasuries. Well, actually, anecdotally, we're not seeing that happen. So if you talk to cross-asset strategists and investors in general, they still prefer equities because in equities, there's so much more diversification. You can go for different sectors, different plays, and the returns are still much more attractive than in the bond market. So for now, we're seeing equities as a more attractive asset class generally as a market sentiment.
Okay, and we'll see how the move higher in yields and the move into positive territory of real yields, whether that influences that at all. I'm thinking, of course, about technology and the strong run-up that we had seen, of course, previously in technology shares. It's interesting to see that here in Europe, technology stocks actually really to the fore and the best performing today, but that's not the US picture at the moment, is it?
Absolutely, but even yesterday we saw the NASDAQ make a big bounce. So tech stocks have been very surprisingly resilient to the rise in bond yields. The main reason is that generally analysts say that robust earnings growth can continue in the tech sector. For example, today Citi came out with a note going overweight several major U.S. tech companies. They're citing Amazon and Airbnb as some of their preferred stocks. So they're looking at particular companies. They're saying don't go along all of tech, but look at particular stocks and companies which can still show resilience and strong growth even in this rising yields environment.
Yeah, once again, a chance to be discerning, or a time to be discerning between tech and tech. Ksenia, thank you very much. Bloomberg's Ksenia Galuchko. And for more market analysis, please do check out MLIV Go on the Bloomberg Terminal. That's the Markets Live blog. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Now keeping you up to date with news from around the world, here's the first word. The Biden administration hasn't figured out how to respond to a federal judge striking down the mask requirement for plane and train travel. The White House and various agencies were struggling to coordinate a legal strategy more than a day later. The mandate had been losing support even among some Democrats in Congress well before the court ruling. And in Shanghai, businesses from car makers to supermarkets are gradually resuming operations in the midst of that massive lockdown. Many factories are able to restart by using a closed-loop system where staff work and live on-site and undergo regular testing. Health officials say that 2/3 of Shanghai's 25 million residents are still locked down. Coming up, we'll turn back to the markets. Trevor Greetham, Royal London Asset Management Head of Multi-Asset, will be joining us. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Netflix shares are dropping in pre-market trading after losing customers for the first time in a decade. Meanwhile, it's Tesla's turn in the spotlight. The electric car maker reports earnings as its CEO, Elon Musk, keeps pursuing Twitter. Investors weigh the impact of rising real yields. Benchmark inflation-adjusted Treasury yields are back in positive territory for the first time in more than 2 years. High-priced tech stocks are likely to be under the most pressure as the move undermines valuations. And the new phase of the war in Ukraine appears to be going better for Russia. Ukrainian troops risk being encircled by a new Russian offensive. Meanwhile, China says it wants to increase its strategic ties with Moscow. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. A lot of geopolitics to discuss, Matt, and we did that a little bit with what's going on in Finland and the NATO conversation, really fascinating. But in terms of the markets, it's the real yields and it's the earnings from tech.
Yeah, absolutely. I would think Netflix is front and center. I will admit that yesterday I thought Jim Bullard suggesting 75 basis points was going to tank the index, and we climbed 1.6% by the close. So I was wrong then, and I could be wrong again. I will be wrong again very often. But right now we're looking at S&P futures down 0.1%. Netflix shockingly lost 200,000 subscribers and says 100 million families are using it without paying. So I would think that's a huge bummer for the NASDAQ. We'll see if that drags all tech stocks. The 10-year yield right now coming off a little bit, just under 290, but just at 289.18. And NYMEX crude up a bit at 103.48, so holding at a relatively high level, both of those things. Bitcoin is up just about 0.7%. We don't really see a lot of movement in crypto today, but it is interesting that we see Bitcoin, which normally has a high correlation with tech stocks, on the rise on a day when we'd expect some moves to the downside. In fact, let's see what they're doing in the pre-market. Kayleigh, what do you got?
Well, let's talk about Netflix first of all, Matt. It is absolutely brutal in early hours this morning, down 26% after its report after the bell last night. Analysts thought they would add 2.5 million subscribers in the first quarter. They lost 200,000. Plus, they said they're going to lose another 2 million in the current quarter. Yes, you have the problem of its suspension of service in Russia, but also a lot of people password sharing. I'm not going to claim guilty as charged on that one, but that is something that the company's trying to figure out, potentially through advertising and cheaper prices for that model. And I would point out that's not just dragging on Netflix this morning. Other streaming operators are also feeling the pain. Roku is down about 6 percentage points. Disney down about 4.5%. The loss of customers, not a great sign for these companies either. And then, of course, the earnings focus is going to shift to Tesla after the bell today. It is down about 0.5% ahead of its report this afternoon, Anna.
A lot of corporate reporting in focus here in Europe as well, Kayleigh, and quite surprisingly, perhaps, given what we've heard from Netflix, technology shares in Europe, the European session, doing pretty well today, although technology here in Europe is a very different beast to technology over in the United States. That's one of the reasons the stock Europe 600 is up by 0.7% and actually has been gaining in the last half hour or so. So positive across European equity markets. We've seen a pause in that higher and higher yield story, and so maybe that's giving some people reason to reevaluate appetite for risk assets. but also we've seen earnings and warnings about earnings in some cases coming through. Let's start with one of those. Credit Suisse down by 1.6%, warning that next week when they give us the detail of their earnings, we will see a loss for the first quarter. And this is partly to do with provisions for legal costs, but also to do with the war in Ukraine. And that makes 5 out of the last 6 quarters where this business has had to warn about profits. Danone, that stock up by 8.7%. The dairy business over in the food and dairy business over in France. A French newspaper reporting they could be interested in all or part of this business from a rival. The rival not available for comment, it seems, and Danone saying it is committed to all parts of its business. Heineken up by 4.4%. The beer maker saying that people are returning to bars, returning to pubs, and drinking beer, even if they're having to pay a little bit more for that. Of the increase in revenue that they saw in the last quarter, most of that was from higher prices that they were able to pass on to consumers. Here's a look at some of the Russian assets. Of course, the focus for us very much at this point is on what is happening on the ground in Ukraine and the difficulties that could lie ahead for Ukraine in defending the Donbass, in defending the eastern part of the country. Interesting from a corporate perspective that we saw Rosneft saying that they are trying to sell some crude right now and they want to take rubles for it, but they will take other currencies. That's interesting in the context of what's been going on in the discussions, similar but different, around gas, Kaylee.
All right, Anna, well, let's turn back to Netflix, as I was talking about just a moment ago. As I said, losing customers for the first time in a decade. It's planning to introduce a cheaper advertising-supported option for subscribers in the next couple of years and crack down on that password sharing that I totally do not do. Let's get to Bloomberg's Alex Webb for more. Alex, is this a sign that peak Netflix is behind us?
Perhaps in the US, yes, that seems to be the indication. I think there is still growth to be found in other parts of the world, not least Asia. They did see 200,000 subscribers cancel their Netflix account globally, but they added 1 million subscribers in Asia. And you've seen a sort of doubling down, particularly on Korean language content, which does very well across Asia. So perhaps peak Netflix in the US, but it's a different story in the rest of the world.
And what's the story with stealing accounts or using accounts that you don't pay for? I mean, 100 million seems like a huge number. What can they do about that?
I mean, so yes, 100 million is what they estimate. Hard to know how they arrive at that number. It seems to be indicating some upside.
It's like twice the English population.
But that depends how you value the true value of Britons. But I think that ultimately, the calculation here is they're telling investors that there are 100 million subscribers we think we can still find. The other message is those subscribers maybe do not want to be paying $12 a month. And given that a lot of the equity story in Netflix has been evolving towards that point where it's like actually the growth is going to come from charging more, if those subscribers are only going to be addressable if you come with a $5 advertiser-supported approach, then maybe the upside is not as big.
Alex, so that's the story around Netflix. This is going to play, of course, it's going to run, and we're going to see what other kind of implications there are from this micro story. What about the battle for Twitter and the pursuit of Twitter that we see from Elon Musk? It gets ever more cryptic. He's giving clues, or is he giving clues as to his approach on Twitter?
Yes, he's sort of whacking the bee's nest and sort of seeing what comes out. It seems to me like as the CEO of Twitter said that there are going to be troubling times ahead, or words to that effect recently. That is absolutely what is happening. Clarity is the last thing we have right now. It's hard to imagine the SEC doesn't look at some of this when they kind of see how the chips have fallen and see what Elon actually did and address these issues where he's kind of playing out a bid in public on Twitter without necessarily filing everything.
Alex, thank you very much. Bloomberg's Alex Webb with the latest on tech. We'll be back to that theme just in a moment, but we've just got a red headline across the Bloomberg, which I should bring to your attention. Our colleagues here at Bloomberg have done an interview with the ECB governing board member Kazaks, who says that a rate increase is possible as soon as July. Perhaps that is a little earlier than some had anticipated. We've heard, of course, in recent weeks, or we heard last week from the ECB about the sequencing and about the timing of when they finish APP, and then people were drawing conclusions about when the rate hike could come. He's also saying that ending APP early in the third quarter is possible. comma, appropriate. We'll see how the market deals with that kind of headline. Let's get back to the tech theme, though, with Trevor Greetham, head of multi-asset at Royal London Asset Management, who joins me here on set in London. Trevor, very nice to speak to you. So you've been talking ahead of this conversation today. You say in your notes that you're underweight US tech and consumer discretionary. I suppose Netflix brings both of those themes together, doesn't it? Because you've got what consumers are doing with their money, but also a tech theme. Tell us the big picture then. Why underweight US tech? Does it have to do with the rising yield environment?
It does. If you think about why tech and consumer discretionary sectors did so well in 2020, it was because all of our spending was funneled into technology and nowhere else. And you had that collapse in real yields, which boosted the valuations. And you've got the reverse situation now, because you've got a strong world economy and rising pricing power. All sorts of companies can put through price increases. We're spending a lot more money on sort of gasoline and heating than we were before. And so you're seeing more of our spending directed to other places, and you're seeing that valuation support removed at the same time.
Well, Trevor, you talk about a strong global economy, yet we saw the IMF joining yesterday and cutting its global growth outlook. There is more and more talk of recession, not just in Europe, but potentially in the U.S. coming down the line. At what point do you anticipate that, and would that mean it is actually time to get back into technology stocks?
Well, yes, okay, two parts to that. The first thing to say is you've got a bit of a hump to get over first. So there's all this talk about doing 250 basis point rate rises from the Fed, or maybe a 75. Lots of rate hikes priced in, and they're needed because you've got this multi-decade high in inflation, and growth isn't collapsing. If you look at the US in particular, wages are rising, there's lots of people employed, there's a bit of a tailwind behind the economies. And so central banks will need to raise interest rates. And absolutely, you're starting to see the lead indicators that say there could be a recession. So the yield curve slope moving towards inverted, the spike in commodity prices. These are all quite worrying. But I would argue you've got that hump to get over. And when you get to the peak in growth, which could be, who knows, 3, 6, 9 months away, possibly even longer, then maybe some parts of tech start to look really interesting again. But the more defensive parts of tech that are going to be defensive in a slowdown rather than the sort of cyclical spending areas.
It looks like to me, Trevor, that, you know, this inflation isn't coming from monetary policy. So the only way that the Fed could stop it is by raising rates to the point where they really hurt growth. And you've even heard Bill Dudley say they've got to punish, for example, you know, equity investors in order to achieve their goal. So isn't a recession almost a foregone conclusion?
I think it's very likely, but, you know, as you point out, the inflation is really supply-side driven. It's to do with the fact that things are in the wrong place still, and we shut the world economy down and switched it back on again. So a lot of this inflation is hard to read. It's supply chain driven, and that could change quite quickly. So there is a possibility that inflation just melts away. And then you find the central banks can sit back and equity markets can breathe a sigh of
this is the key
relief.
question.
But I think it's more likely there's a hard landing.
How quickly can the ship right itself in terms of the supply chain, in terms of the chip shortage? When I talk to the heads of Volkswagen and BMW, as well as, you know, people running logistics companies and shipping and ports, they all say it's going to take a while, and it's not going to happen quickly. You know, Sipsa from BMW said they're going to be chip shortage problems through 2023. So this is something that's going to take a long time.
Yeah, absolutely. I mean, at the moment, you've got to diversify quite broadly. We're overweight commodities. Our favourite market's the UK market, which is in a much less demanding valuation, much more exposure to these value sectors that can still see some good numbers coming through. And we're not yet bearish stocks, we're neutral stocks. But I agree, it could take some time to sort out the supply chains, and it may be that you need to get demand to come down in order to reach that equilibrium again. And central banks sometimes do need to create recessions. They very rarely admit it. They would prefer to view that later on as a mistake, but sometimes they need to do it if they're going to hit their inflation targets.
Right, and with all of that said then, Trevor, and the likelihood of recession or hard landing for the US economy, maybe for the global economy, where does that leave us with fixed income? Because fixed income's been really out of favor, of course, of late. Today we saw Bank of America strategists going long US 10-year treasuries, targeting 2.5 2.25%. We got from 2.25 up to 2.89 in quick order, but we could go back down. Where do you see fixed income then? Where do you see treasuries?
So tactically, we're still underweight treasuries and government bonds generally. So although we're seeing margin squeezes and downgrades beating upgrades now from corporate analysts, you're seeing positive macro surprises. So you've still got too much growth, I think, to start really overweighting treasuries. But from a strategic point of view, absolutely, we would defend the role of having bonds in the portfolio, because when you hit that peak in growth and there won't be someone ringing a bell telling you the day it happens, you'll be glad you actually had some bonds in the mix.
Okay, too much growth, though, to be long of treasuries longer term. Trevor, thank you very much. Trevor Greetham, head of multi-asset at Royal London Asset Management. Coming up on the programme, the growing cost of Putin's war. Some Kremlin insiders fear the invasion was a catastrophic mistake, but see no chance of the president changing course. More from our big take story next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now to our latest big take story. Bloomberg's learned a small but growing number of senior Kremlin insiders are quietly questioning Vladimir Putin's decision to go to war. They believe the invasion was a catastrophic mistake that will set the country back for years. Mark Champion, Bloomberg senior reporter for international affairs, joins us. And I said a small group, Mark, but give us some size and scope about how small this group is, how senior or otherwise. What's the context?
Well, it is small. The Kremlin has always been divided between hawks, who they're called the Silovki, they're the power ministries, and those are the people who are really behind the war, the people whose ear increasingly over the last couple of years Putin has had. There has always been another group in the Kremlin who are more focused on the economy. And it's those people who are concerned because they know in the medium term that this is really going to have a pretty devastating effect on the ability of Russia to grow, to develop new industry, and so on. I couldn't put a number on it for you. I don't think anybody could. But these are the people who are concerned. We already know that there are some, oligarchs who are outside the sort of magic circle of Putin's immediate friends from St. Petersburg and earlier days, and that they're unhappy. They're under sanctions. They've lost a lot of assets.
But it's too late right now, Mark, for a huge portion of the Ukrainian army, especially in the Donbass region, right? I mean, equally, every day we get new headlines from the Biden administration that they're going to send more weapons and more money, but that's also too little too late, because the Russians have really surrounded a big portion of Ukrainian forces.
Well, they haven't surrounded them yet, and I think there have been most people have been surprised most of the time during this war, and the Ukrainians continue to surprise in their ability to hold back the Russians. The Russians continue surprised in their sort of lack of the kind of modern equipment and prowess that one would have expected. So it's certainly not a done deal. But yes, the amount of equipment that the Ukrainians need now in order to really succeed is really very large. You just burn through this stuff at an incredible rate in a campaign of this size. So the West will really struggle to get it there. Just remembering that just to get it from the Polish border to the Eastern Front is about 1,300 kilometers, and the Russians are watching. They've got drones in the sky. They've got missiles that they're attacking transport links with. So it's tough.
The supply challenge then of this war in the east of Ukraine. Mark, thank you very much. Bloomberg's Mark Champion. And remember, you can find out more from this exclusive reporting. NI Big Take is the function to use on your Bloomberg terminal to get more details on that story. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think when you look at things like treasuries, right? I think tokenized treasuries would be really interesting. I think you could provide transparency and real-time settlement of them. Getting rid of this sort of like T0, T1, T2 system that we have for various asset classes, right? With securities where it takes 2 days to settle a trade and there's sort of like some amount of uncertainty and risk and exposure during those 2 days. I think it would be really cool to see, real-time margining, real-time risk, and real-time settlement.
Sam Bankman-Fried, billionaire CEO of FTX, speaking with us on Bloomberg Crypto yesterday, talking tokenized treasuries, but also he'd really like to talk to Elon Musk about decentralizing Twitter. Let's talk more about treasuries now, though. Tom Keene, co-anchor of Bloomberg Surveillance, is joining us, and his single best chart is taking a look at them.
It's a real clinic here on the real yield, and what it comes down to is with the real yield ticking positive for a Mint Miller cup of coffee last night, the answer is the differential between the actual nominal yield surging higher, the 30-year bond towards 3%. There's a 10-year yield up. And the space between is the inflation guesstimate. It is the nominal yield minus all that space. And notice the big inflation to the right, and at the beginning of the pandemic, the presumed disinflation and outright deflationary guess of long ago and far away.
You have a fantastic guest on today. I love talking to David Malpass, not just because he's the World Bank president, but because of his experience on Wall Street and in Washington, right? He served in at least 2 White Houses.
Yeah, it's true, Matt. And what's so good about Mr. Malpass is he has an encyclopedic understanding of the dynamics of the world economy. And you saw that with a markdown by the IMF, in particular, markdown by the WTO. So he knows the backdrop of this humanitarian crisis in Ukraine and the food crisis against GDP. So that'll be a good update here as the spring meetings of the World Bank begin.
Really looking forward to that interview. Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. Now let's take a look at what else we're watching today. What I am watching, but apparently a lot less people are watching, is Netflix, because they lost 200,000 subscribers in the first quarter. They expect to lose 2 million more in the current period, and this stock is cratering in pre-market trading, down 26%. It could lose $40 billion in market value today. What's interesting, though, Matt, is how much is this going to read through to broader technology? Because I'm also taking a look at NASDAQ futures. They're on the cusp of positive on the day.
Yeah, S&P futures have turned higher as well. It's been a really interesting couple of sessions. I'm watching Tesla as well. A slew of earnings, obviously, out as we get into the heart of earnings season. But it's going to be interesting to see how well Elon Musk has done in terms of building, opening up, and producing in new factories around the world. He has consistently surprised investors on this one metric, just really growing output and revenues at an exponential rate, as Matt Winkler put in his column just a couple of days ago. Of course, we're all wondering about how the Twitter takeover is going. I'm not sure how much detail we're going to get on that, but certainly we'll get closer we'll get a little bit more on knowing what Cathie Wood's prediction, how realistic that is. Remember, she thinks Netflix shares can more than quadruple. I think she has now a $4,600.
Tesla shares, not Netflix.
Tesla shares, sorry, Tesla. Thank you.
I don't think Netflix shares are going to quadruple today.
No, certainly they could go the opposite direction. But Cathie Wood thinks, 4,600 from 1,000. So incredible forecast, and we'll see if these earnings support that.
We will see how much he sticks to his Tesla script and how much he's lured off course, perhaps, into talking about Twitter. Let me tell you what is on my mind. I'm watching French politics. Marine Le Pen, of course, and Emmanuel Macron. We're gearing up for the final vote over the weekend, and tonight, in the run-up to that, we see the only live TV debate. Last time around, in 2017, this was 2.5 hours long. It was seen as pretty crucial in Marine Le Pen's failure. Emmanuel Macron goes into this ahead in the polls. We will keep watching with interest. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Investors are bracing themselves ahead of this big Fed move.
To what extent does consumption start to decelerate or at least grow at a less strong pace?
Part of what the Fed needs to do is tighten financial conditions, and they haven't really done that too much yet.
I think it's undoubted that we are seeing a slowdown in economic activity and the Fed pressing hard on the brakes.
At some point, the Fed's going to make a judgment call between accepting a recession and forcing us into one or just embracing stagflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures are flat on the S&P, negative a tenth on the NASDAQ. TK, there's only one stock to talk about. Netflix getting absolutely hammered.
In the entertainment world, and for all of our listeners and viewers, John, it's really fundamental. I mean, it's a new, as some would say from the 50s and 60s, the new idiot box. Streaming is shattered this morning.
The stock's down 26%. Tom, go through the investor letter. It is pretty brutal. That's the company basically explaining to investors that they have gone ex-growth and that any potential growth, largely, somewhat, out of their control.
Yeah. We're going to really jump on this today, and we're going to do a lot of sophisticated financial review of this today and, frankly, over the next coming days. But, John, there's a point where growthiness switches to cash flow. Can they make that switch a la what Comcast did years ago?
That's the earnings story. We need to talk about the valuations as well. And Lisa, when you think about valuations, you think about real yields in the bond market. You've been watching it ever closer over the last few weeks, and overnight, there we go. Positive briefly on real yields.
Yeah, exactly. And people have been watching this because it changes the dynamic. Just to put this in perspective, before the pandemic, real yields were positive, right? This was a normalcy. Now it's an abnormalcy, and yet we're getting back to that place. How much does that move the dial on some of the bearish calls on equities, given the fact that we haven't seen full capitulation? And how much is Netflix really a reflection, not only of a fundamental story, but also a valuation?
Speaking of bearish calls, did you see the bullish call from Mark Cabana and the team over at Bank of America? Get long treasuries on the 10-year.
Look, a lot of people are saying this, that basically there is going to be a natural reduction, that we have not abandoned the low inflation kind of trend that we saw pre-pandemic. However, how long does it take to get there, and how much does the Fed have to disrupt the market in the near term to get there is really the question.
Their target, TK, 225 on a 10-year after coming very close to 3% in the last couple of days.
Everybody's going to have a different opinion on this. It's going to keep us employed, John, through the rest of the year. I would go back to what I've said all along with it's a growth analysis. You can bring that over to Netflix as well, frankly. But on the American economy, it's about growth. If we get the growth statistics that IMF was talking about yesterday, you know what? that's not all that bad. And the market did a little better off that World Economic Outlook release.
We've got a ton to work through this morning, that's for sure. Good morning to you all. Your price action looks like this on the S&P, unchanged. On the NASDAQ, negative 0.1%. On Netflix, that stock is down and down hard. It's negative 26%. In the bond market, yields come back in. A bid to treasuries, 287.25. Yields lower by 6 basis points or so. And a euro a little bit stronger. Euro dollar 108.54, up 0.6% on that currency pair. Bramo, some talk about a July rate hike, really?
It's from the ECB, from a possible official talking about the potential to begin liftoff in July. Let's see if they can actually get that off the ground. All right, here's what I'm watching today. At 10 a.m., we get U.S. March existing home sales. The reason why I'm actually particularly interested in this today is because of what we saw yesterday with home starts. We are expecting a deceleration in sales, especially after that 5% threshold was breached in terms of average mortgage rates, the highest going back to 2011. But yesterday, housing starts came in at the fastest pace going back to 2006. Is this evidence that the Fed's hawkish talk has not been enough to really drive down some of the momentum in some of these key markets? And that really is something that seemed to spook at least the front end yesterday morning. Today we get a slew of Fed speak. It is the Fed speak train before we get the quiet period. San Francisco Fed President Mary Daly at 10:30, as well as Charlie Evans of Chicago Federal Reserve at 11:30. How much do they talk about what we heard yesterday? Charlie Evans actually taking a very different tone than some of the others, basically a lot less hawkish. And how much do they move to the 2 p.m. beige book, which I know you guys are all trained to, and I want to parse through to really understand.
Watch the French debate, or do I, read the beige book?
I think you could do both.
Leave beige.
Okay. After market, we also get the earnings parade continuing, most notably with Tesla. And I'm curious, Tesla has not seen the same kind of performance as Netflix, even though it's off about 10% since the early in April. However, how much is the discussion really about Twitter and not about Tesla at all, and regulatory pressure of Elon Musk, John?
Well, right now the conversation is about another company. It's about Netflix. What happens when the market's looking for 2.5 million subscribers and you post negative 200K? What happens when in the current quarter they're looking for another 2.5 million subscribers and you tell the market that you think you'll lose another 2 million? What happens is obvious. The stock is down, aggressively so, by almost 27% now in the pre-market. Joining us now is Bloomberg's Alex Webb. And Alex, we've asked this question a few times in the last 12 hours. What on earth happened?
Two things, really. End of lockdowns and inflation. So the end of lockdowns, they had enjoyed really good growth over the course of the past 2 years because people had a lot more time to sit in front of a TV screen or a computer screen and watch content. Now they have less time, so then not as many people need it and they're unsubscribing. You combine that with the impact of inflation, where people maybe are starting to look at what is discretionary income and discretionary spending, and what they can get rid of, and Netflix seems to have been on that list.
Alex, a lot of people look smart here. Michael Nathanson's doubted it from day one. Pachter over at Wedbush has been the same way. Here's Nathanson, folks, writing it up in the Bloomberg News last night. I mean, it's something. It's just shocking. Everything they tried to convince me of over the last 5 years was given up in one quarter. It's such an about face. I want to know, Alex, what the little guys do off this shock. The egos at Warner Brothers, Hulu, whatever that mess is. We saw the CNN Plus news last night. I want to know what Paramount, Teensy Ween's Paramount, does off this shock.
So all these companies over the past few years have been pivoting to become growth stocks. Disney is the prime example of this. They told investors, we're not going to be as profitable over the next few years because we're going to be investing in Disney Plus. That's going to deliver growth. And their stock had benefited from that. And then loads of other companies got on the bandwagon. What we're now seeing is, do they need to somehow pivot to becoming a value stock? Now, that is a challenge because you mentioned Comcast a little bit earlier. The advantage that these old cable companies have is that they would sign customers up for 18 months, sometimes 2-year contracts. They've therefore spent the money on customer acquisition and are guaranteed perhaps $1,000 over the course of that contract. The thing is with streaming is it's month-to-month subscriptions, so customer acquisition remains expensive. You have to keep investing in content to retain the customers, and those customers could churn out every month as the marketplace becomes more competitive.
Alex, is this a Netflix story, or is this a broader economic story of inflation and of consumers cutting back?
I mean, I think it's a Netflix and streaming story, but it is part of the panoply of factors that are the inflation story. That we are seeing this across various industries where they're having to deal with changes in consumer spending patterns. The question for Netflix is, have they topped out? Have they reached the maximum number of subscribers they're ever likely to get in their home market? They will argue no. They say that there are 100 million households out there sharing Netflix passwords. They clearly were saying that to investors to indicate there is some upside. But the fact that they think they need to introduce an advertising-based model, which presumably will come in maybe around the $5 mark as opposed to the $12 mark as it currently stands, that means that where they had telegraphed growth would come from, i.e. increasing prices, is not going to come from there. They have got to go lower in the market. One final thing that is really significant here is if we think about the FANG stocks as was, maybe Manga you might want to call them now, given Facebook is now called Meta, all these companies are increasingly getting into each other's turf. They're getting into advertising in Netflix's case. That is Google and Facebook's turf.
Yeah.
The more they do that, the bloodier the battle is going to become.
Alex Webb, great to catch up, buddy, and fantastic coverage from you, as always. Bremo, the danger with a story like this story is that it can become whatever you want it to be. Take your pick, confirm your priors. I think there's something for everyone in the story overnight.
You have the idea of saturation of streaming. You have the idea of people cutting discretionary spending. And then you also have pick your own valuation story as well. You're correct. You could pick anything in this, but it's all bearish.
Well, Netflix just sucks, and people are watching other stuff. We've got to wait for the other streaming companies, haven't we? What's interesting about this piece, and I keep referring back to the investor letter, I encourage everybody to read it. Every single excuse under the sun is in there, but they break them down in 4 points. The second point, Tom, we didn't touch there in a big way, but in addition to our 222 million paying households, we estimate that Netflix is being shared with over 100 million additional
That's
households.
been the digital free lunch.
That's been the story for a while.
Yeah.
But when your penetratable market is limited, you need to do something about that, and that's going to be where the effort is now.
This is the digital fantasy that's out there, not what I think, what guys like Michael Nathanson or Michael Pachter over at Wedbush think. They have doubted this model from day one. And I find fascinating, John, that Zavlev is out with Warner Discovery, Hulu, CNN, whatever that merger's, HBO Max, whatever he is, and they have 56% debt. So to me, the story is less Netflix and what Paramount does this morning, what Warner Discovery, Hulu, CNN does this morning, et cetera, is we go into this modern age of entertainment.
And if they believe the pie's not going to get bigger, Tom, I think your point is, what are they going to do on content spend, right?
What are they going to do on capitalization as well? I'm sitting here with the Bloomberg FA screen trying to find free cash flow ratios. Some of the free cash flow ratios that we use on the FA screen, they're not even priced for Netflix. Their profitability, given some adjustments, is a fiction. It's always been that way.
Let's get a quick word from Margie Patel, the Senior Portfolio Manager at Allspring Global Investments. Margie, I want to start here with just the real yield turning positive briefly. How much of a game changer is that when it comes to big investments in, say, big tech?
Well, I think one thing it shows you is maybe the Fed may be nearing a pause as far as the aggressive rate increases people were looking for. And I think that's why the market rallied yesterday, saying, well, the economy looks pretty good. But on the other hand, maybe the Fed isn't going to be as aggressive because the market, having moved up, has done a lot of their work for them.
I look, Margie, where we are now, and we all have to readjust. Can you buy bills, notes, and bonds now, as Bank of America suggests this morning? Can you actually go in with confidence and acquire fixed income?
Well, I think treasuries is more of a trading opportunity. But when you look at high yield, I think that actually looks pretty attractive for the income-only oriented investor. The average yields are between 5.5% and 7%, and prices are now at a discount, about 95 cents on the dollar. So you have room for capital appreciation if yield spreads narrowed. And also, most importantly, defaults are only going to be under 1% this year and next year, according to the rating agencies. So that means you'll get to keep all that extra yield. So that looks like a good risk-reward bargain to me.
Margie, based on what we've priced at the front end, do you sense things are fully priced?
I think the longer part of the curve looks pretty appropriate. I think we can expect the Fed to try to move up the short end. Again, I think they're going to be talking more aggressively than what they actually do. But I think the Fed, it isn't like the Fed has a precision machine and they know what's going to happen with each change of the dial and change in rate. So I think they'll be cautious, and we'll see a small increase, and it won't have much of a negative effect on the markets.
Margie, thank you. As always, Margie Patel there of Allspring Global Investments, just weighing in on what's been happening with the bond market, and they're the two big stories for us at the moment. Briefly, a positive real yield on a 10-year Treasury, and just a stock called Netflix getting absolutely hammered. And as you'd expect, Lisa, this morning, the South Side coming out with their tail between their legs and cutting their price target. Bank of America cutting Netflix to underperform, a price target of 300. JP Morgan cutting the stock to neutral, a price target of 300. Again and again and again, you've just seen a stream of it through this morning.
Just to put this into perspective, Netflix shares are down more than 70% since November. Just to give you a sense of how big this decline has really been, John.
300 seems to be the favored round number. Here's Wells Fargo. Netflix cut to equal weight, price target 300. Futures are just about positive on the S&P. On the Nasdaq, we're negative 0.1%. It's Tesla's turn after the closing bell, coming up a little bit later. From New York City this morning, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg Surveillance.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
Inflation has become a clear and present danger for many countries. Even prior to the war, it surged on the back of soaring commodity prices and supply-demand imbalances. War-related disruptions amplify those pressures.
That was Pierre-Olivier Gourinchas, the IMF chief economist from New York City this morning. Good morning to you all. Equity futures shaping up as follows on the S&P, essentially unchanged. The Nasdaq slightly negative. On the Nasdaq 100, we are down by 13 and negative 0.1%. That's a story in the equity market. I'll get to a single name in just a moment. Yields come in. The Treasury market is bid. We're down by 7 basis points to 286.86. Stock of the morning, though, of the day and maybe of the month, Netflix. Already down, getting absolutely hammered year to date by more than 40%. And then in the pre-market, look at this. We're down 27.21%, TK 253.76. Pain in the first quarter, projecting more pain, much more pain in 2Q.
And John, to be clear here, and it's not something we usually do, but the tick by tick here off of 4 p.m. yesterday is it continues to go southier, doesn't it?
It gets worse. It does not get better. And that seems to be the trajectory for the year for this company as well, Tom.
Well, major shout out to some of the people we've talked to who have been Netflix skeptics over the year, particularly Michael Nathanson and Craig Moffat and the rest on the sell side. Pachter over at Wedbush, John, has just been a genius.
Hasn't he just, Tom? Hasn't he just?
Scary, scary good. We're going to digress right now. There is so much news flow on Ukraine and, frankly, the linkage back to Washington. I mentioned yesterday the contribution America's making, humanitarian and military effort to Kyiv. It's rather extraordinary. Jack Fitzpatrick is in Washington, and in Helsinki this morning, distant from Kyiv, is Maria Tadeo. And we start with Maria Tadeo. Maria, I look at Finland, and the reality is Helsinki has a Murmansk reality. It is 800 miles from the northern Finnish border to a modest submarine base of Russia. How threatened is Russia by that 800 miles from their sub-shop over to the Finnish border?
Look, I think it is the #1 threat for the Finnish. If you ask the Finnish, they'll tell you it really is a problem now. And we've seen that for a country that is not a member of NATO, that is not under the umbrella, the clear umbrella of a military alliance, you find yourself with a country that one member of parliament told me is now clearly an aggressor, does not have problems using aggressive force on neighbors, and that could potentially be a threat. So for the Finnish, it is a big threat, and this is why they're moving today, and this is a reason why I'm here today. Tom, they're moving forward with an application to join NATO. And this is a watershed moment, Tom. This is undoing years and decades of foreign policy in the Nordics to now say we want to enter this alliance. So in many ways, we've talked about the real-life implications of this war in Ukraine. We'll take a look at this one. This is real-time history that's happening.
What does Brussels do to assist Finland?
Well, I think it's more see a lot more military deployments now in countries that border Russia. The question is, how is Russia going to retaliate when it comes to this? And they say, well, for them it's not good news, and they're ready to take actions. What kind of actions? It's unclear.
There's also a question about what the red lines are, Jack, when it comes to Mariupol, when it comes to some of the battles that are currently underway with Russia making a more aggressive push into the eastern part of Ukraine. Do we have a clearer sense of what the consequences will be if Mariupol falls, if the Donbass region does fall to Russia?
Well, the consequences from the U.S., I'm not sure those events necessarily would change the U.S.'s stance or the European stance necessarily. When you see a country like Finland talking about joining NATO and the EU talking closely with the U.S. about sanctions, they're already pretty much pedal to the metal on trying to pressure Russia. The outlying questions would be, can you get China and India to pull away? Is there anything else they can do to further enforce sanctions? But the level of concern would not change in the U.S. or presumably in Western Europe or Europe based on the change that Russia has made to focus on the East.
But Jack, just to pick up on one thing you said, in terms of China's support for Russia, we actually heard from a Chinese official overnight actually reaffirming their partnership with Moscow. What's the potential consequence that the U.S. is prepared to go after with respect to China, not just Russia, should it continue to be a close ally of that nation?
Yeah, the president has said there would be consequences if China were to provide material support to Russia. The statement that came out from the vice minister in China seemed to be words of reassurance to Russia, even talking about expanding their diplomatic relationship. But it wasn't quite military aid or something along those lines. It kind of raises the question, to what extent is trade between China and an economic relationship pushing the envelope, and to what extent does that get to what the president warned them about? That statement may not be enough to get real concrete pushback from the U.S., but it is the kind of thing that the president has already warned China about.
Jack, just quickly, different story, forgive me, but just for a moment, where are we in the mask saga for this administration? What are they doing?
They're deciding. The Department of Justice has said they could appeal the federal ruling that blocked the travel mask requirement if the CDC decides that they want to keep that mask requirement in place. The CDC had been considering whether it's necessary and apparently didn't quite realize that DOJ would be waiting on them. So there's a bit of an interagency waiting period to decide exactly how they want to go about this. They seem to basically have been caught off guard by that.
That's okay, because that's the way Lisa and I are about 24/7.
Caught off guard, Tom?
Yeah, you know.
Have you seen the confusion at the airports around this now, Tom? TK, still, people don't know what to do.
I don't know. Maria, are there masks in Europe? Are there masks still on planes in Europe?
Depends where you go. It depends where you go. Yes, on the plane, but not on the ground.
Rhea, thank you. Brief, but that's what we needed just then. Rhea today,
she nailed it.
alongside Jeff Fitzpatrick.
Are there masks in Europe?
Up against the commercial break. I believe there are masks in Europe, Tom. I'm just not sure if they're being used in quite the same way as they were. The confusion, TK, huge still.
I had a cab driver in Paris throw me out of the cab because I didn't have a mask.
You didn't put the mask on?
No.
Did you not have one in your pocket?
He was the only one, but I didn't have one in my pocket.
Have you tried that before in New York?
No, I haven't had trouble in New York, but in Paris, a guy threw me out
Did
of
they
his
not
cab.
have that divider in the cab, Tom, between the driver and
No, they really don't.
in the back?
Actually, they don't,
Interesting.
now that I think about it.
There we go. From New York City, this is Bloomberg.
about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Coming off the back of a decent day of gains on the S&P 500 yesterday, we're basically flat at the moment, up by 0.06%. On the Nasdaq, slightly negative, down 0.1%. Yesterday after the close, we heard from Netflix. Later today, we'll hear from United Airlines and Tesla as well. But look at this move in Netflix. We are down and down hard. And this is what happens if you're a growth stock and you have to send a letter to investors, and basically in the whole thing, you tell them you're no longer a growth stock. If you're looking for 2.5 million subscribers and you deliver negative 200K, and the market's looking for 2.5 million subscribers in this quarter, and you tell the market that we're going to get negative 2 million, this is what happens, down 27%. And coming into yesterday's print, this stock was already down by more than 40%. Cue the south side, cut to the price target, one after another through this morning so far. That's the equity market. In the bond market, we're looking at the valuation story from the bond market into equities, driven by slightly positive real yields on a 10-year. Briefly, we back away. Your 10-year, Tom, down by 7 basis points to 286.86. And B of A have a call, a big call, I think, TK. Mark Cabana and the team suggesting now is the time to get long 10-year treasuries with a target of 225. They believe the inflation panic, if they want to call it that, their words, not mine, that starts to fade, and that should allow long end yields to come lower through the back end of this year, Tom. That's a call for the next several months.
It'll be a movable feast. We'll have to see what it is. And foreign exchange again this morning. Yen hasn't given us a move to weaker yen as well. Let's jump to Stephen Roach with us now of Yale University and the Jackson Institute of Global Affairs. And of course, Accidental Conflict is a new effort out by Dr. Roach. Steve Roach, I want to celebrate right now how you, more than anyone I know, was out front on a Fed that looks at interest rates, a Fed that looks at employment, and you said this is a Fed that has to look at the asset buildup within the American economic experiment. I believe we're now where we're trying to shrink the asset buildup. Do we have any history, model, or theory that explains to us what quantitative tightening, in whatever form it is, will be?
Well, Tom, the Fed is clearly in uncharted territory, both in terms of providing stimulus at the zero bound for an interminably long period of time. And it's, promised to get us away from that. But so far, we've seen 25 basis points of that promise. And the tapering you allude to is coming off again an extraordinarily high level. And every time they've tried to do that in the past, the markets have had a tantrum or some other adverse reaction. And it sets the Fed up for having a very difficult time in weaning the U.S. economy and the financial markets off the frothy asset markets that they have created, and that's a big challenge. You're right.
The World Economic Outlook out yesterday really points out the history here of taper tantrum and the testing of yield dynamics and that. I want to go, Steve, to what you weaned at Morgan Stanley, which is, let's not forget the back end of the GDP equation, which is trade growth. IMF says trade growth is slowing for any number of reasons, including tourism, but 21, 22, 23, it is diminishing. Are we anywhere near global recession?
No, we're not there now, but you know the dynamic of a recession in the face of central bank normalization, this inflation shock that everybody is convinced. I mean, Jonathan just cited some bank report that is absolutely convinced that inflation is going to vanish into thin air by the end of the year. Maybe it will, but the odds are it probably won't. And then you add to that, you know, the geo-strategic shocks that are playing out on our screens real time. You know, the world economy is facing some real serious challenges, and you know, it comes in with a strong post-COVID rebound cushion, but you know, as we're seeing in China, that cushion can disappear very quickly.
Stephen, have you been surprised by this dollar strength?
Yeah, putting it mildly. I mean, you know, this is one of those great lessons. I should have gathered this when I first ventured the idea that the dollar would fall, that you should never make a currency forecast. Alan Greenspan advised me of that decades ago, and he was entirely right. So, you know, I'm prepared to eat as much crow as you guys want to feed me.
Stephen, that wasn't the intent of the question. Really, the question that I'm having is, how do you even come up with a forecast? How does the Fed even operate in an environment beset by not only really unique circumstances on the fiscal side, but also these conflicts that you're writing about with this book that's coming up, this idea of how does a Fed sort of arrange itself and its forecasts around conflicts that have unexpected impacts on inflation?
Look, it's a classic risk management exercise for forecasters. You know, weigh the balance of risks and assign some probabilities to it, and then try to be objective in weeding through that. And remember what your mandate is. Your mandate is, you know, price stability and full employment. The Fed does not